0.14. That's a Bloomberg Business Flash, and Bloomberg Markets continues with Bailey Lipschultz and Manus Cranny in for Paul and Matt tonight.
And thank you, Nathan Hager. As you said, Bailey Lipschultz and Manus Cranny here, filling in for Paul and Matt. Joined now by Nancy Tangler, CEO and CIO at Laffer Tangler Investments here in the Bloomberg Interactive studio. Nancy, we get jobs data, we get University of Michigan sentiment data. Markets are trading higher. Too hot to handle? It seems like we were not initially kind of gearing up for this kind of a market reaction in the pre-market trading.
Yeah, well, I think the volatility, well, first of all, it's friend of the long-term investor. So if you were in there buying early this morning or pre-market, you're in good shape. But I also think that the Michigan numbers were more important than the jobs numbers. They weren't really, the jobs numbers, that is, as robust as the headlines indicated. So you saw, the return of UAW and screenwriters. You saw a lot of healthcare jobs, but manufacturing jobs were down. So I think that the initial reaction was ill-informed. Remember that it's the algorithms that are reading the headlines, driving volatility. But the Michigan numbers were actually, I think, quite encouraging, and I'm loving this rally.
Those pesky algos, and I have it on good authority that they have financial clout. The one-year inflation expectations come in at 3.1% on the Michigan numbers. Now that is perhaps the more significant piece that the bond market will look towards, isn't it?
Yeah, and hugely better than the market was expecting.
4.3 was the expectation,
right.
Previously 4.5%.
Yeah. So you're right, Manus. I think one of the things that we've been arguing is that inflation, yes, it is coming down. I think what the disconnect between most people and us, the financial community, is that it may be coming down, but there are still embedded very high costs. I think so. That's why I think the Michigan numbers are so powerful, because there seems to be some realization that we're at the end by the consumer. Maybe they can, sort of absorb some of these higher prices.
Can I just say, as a recent transplant to your fine country and your esteemed city, my gosh, it's expensive. And I have come from one hellish expensive city from Dubai, from the Middle East, on food, on booze. And there was no tax. There was no income tax there. I mean, I'm being taxed within an inch of my life. How strong? Where do you want to be in this economy? Because is this the immaculate disinflation? Is this the soft landing? Oh, these sayings are so awful. But how do you position for it? Because it doesn't look brutal or hard.
Well, Manus, I think we were talking pre-show that my analogy is I was alive in the 90s. And
As was I.
And I was managing billions.
I was too, just for the record. Let the record show.
Barely. And I was managing billions of dollars. And this feels a lot like that. So you have what I would call, and some are calling the fourth industrial revolution, or a super cycle in technology, digitization, generative cloud, computing. I mean, just look at Broadcom's numbers last night, and that's the poor man's NVIDIA. So if you look at that, and you say, okay, we had higher inflation, we had interest rates that were 5 to 8% in the 90s. We had an inverted yield curve, what was called then a soft landing. I'm not predicting one this time. We had a war, we had a recession at the beginning of the decade, and yet the NASDAQ was up over 8%. The Dow and the S&P were up over 400%. So I think stocks can continue to do well in here. The surprise is going to be earnings, I think, for most investors. And I think what we're seeing now is that, for the most part, the market's not listening to the Fed anymore, which I've said, and we don't need to debate it, has a credibility.
The rates market hasn't been listening to the Fed all year.
Has a credibility problem for sure.
Yeah.
So I want to be in overweight technology. I want to be overweight industrials because the PMIs are bottoming.
When you're looking at technology, though, is that predominantly within the Magnificent Seven and Friends, or you're looking at kind of more of a widespread rally within tech?
Yeah, so the companies that are, so our investing theme is old economy companies, Bailey, that are pivoting to digitization and embracing it, and then the companies that are providing those tools. So our biggest holdings in technology would be Microsoft, Palo Alto Networks, ServiceNow, Broadcom. I'm probably forgetting half a dozen of them, but the names that are going to drive this next super cycle. I'm not interested in Meta. We own a little bit of Google, but those are in some ways glorified ad companies. We want the ones the companies that are driving it.
It's interesting because when we've had a variety of people in through the morning time talking about the propensity for Mag 7 to deliver outsized returns in 2024 may well be more challenged, and perhaps you want to go a little bit more for breadth. At the end of every year, I'm waiting for the Goldman's report to come out on buybacks or whatever, but this is where I want to get your sense. Buybacks are incredibly important. Apple intermittently do it, and we spend the whole day gorging on Apple's buyback and bond issuance to fund it and whatever. But where will buybacks put a floor in this market?
Absolutely.
And to what extent?
Took the words right out of my mouth.
It's from the script.
We secretly have notes.
Did I say that?
Oh, did I read that?
You said it better. Yeah, I think clearly they are going to. And one of the things that drives, and will continue to drive that, is the insatiable appetite that the shadow banking system has for corporate bonds. But if you just look at the Mag 7, it's not all of them, I think it's 4 or 5, they're going to issue $100 billion in share buybacks over the next year or two, or claim $100 billion, however you want to say that. I think that's what we saw in 2020 and 2019, and that's what we're going to continue to see in 2023. It is, and Apple's a big chunk of that. So you just need them to do what they say they're going to do, and so I think you buy the dips in technology. And I know there's a lot of people that are saying the tech trade is over. I just don't agree. I think they're ill-informed.
Well, I'm looking at kind of the catch-up trade, if you will. We're seeing the equal-weighted S&P catching up really since that November, late October bottom. How do you see that playing out in different areas? You mentioned industrials. Is that a place that you're continuing to put cash to work? What names do you like within the industrial space?
Yeah, so we like the ones that are automating. And I would say broadening out is great for portfolio managers because we have to be diversified, Bailey. So you can't put all your eggs in the technology basket. But, you know, Carrier is one of our largest holdings in industrials. You saw it pop today on the sale. We also like Illinois Tool Works. We have exposure to Emerson Electric, and we actually have exposure in a different portfolio to Honeywell. So it has done not nearly as well as those names, but I think you still want to be in the short cycle of industrials, and then broaden out in. We have a market weight in healthcare. We have a market weight in financials, and an overweight in consumer discretionary. So broadening out is great. We were adding risk back into our portfolios in October of 2022, so we were adding to technology when the last death knell was issued, and we will continue to do that as we have the opportunity.
You mentioned consumer discretionary. The chatter's died down a bit, but what's your thought on kind of this Ozempic trend, and is that really going to reshape the entire economy and how people spend?
I don't think so, Bailey. I mean, you know, I was around when we had fen-phen, and for a while it was great, and then all the side effects showed up, and I just don't think there's enough data. And I was just in the Midwest, and they have not gotten the Ozempic message, or the memo. So I think it will have an impact mildly, but I don't think it's going to hurt these companies like the initial reaction indicated.
And then just very quickly, we have a big take story this morning talking about Hermes having delivered 1,000% return since they batted away LVMH. You know, do you feel confident at all in taking some of the higher, let's say, the premium names relative to Hennes is a very European number. I'm learning as I go here in terms of what's big on the high street. Anything? Are you still comfortable taking any of the higher value luxury names?
Yeah, I mean, we do own Lululemon, and it looks to me like it turned around this morning when I was walking over here, and that's because they are a premium provider, and they've delivered, and they're adding to
481.16, up $16.
Yeah, I'll take it. And then we own Nike. So that's another name in that space that, you know, can be high.
With those,
somewhat high end.
With those, though, like, again, somewhat high end, definitely areas that are targeted to the younger generation, people who want to spend. When you look
That's
at
you,
that is me. I know. I don't want to. For people not
and the
streaming
baby
on
boomers,
YouTube,
we're spending like crazy.
I'm technically not a baby boomer yet. Go on.
We've got about 30 seconds, but how are you thinking about kind of the strength of the consumer into 2024, just given how much the younger generations have been putting on credit card debt and things like buy now, pay later?
Yeah, great for American Express, by the way, which we also own. So I would say that people spend when they're working, and they spend out of their net worth. Americans have $154 trillion in net worth, half of which is in with my generational cohort, which is the baby boomers. They are going to continue to spend. They have no debt. For the most part, and they will continue to spend. So I think high end is good. We're looking at LVMH. looking for an entry point, and I'm going to run over to Hermes now that you reminded me.
I can't afford to go in through the door.
We got to leave it there, though. Thank you so much, Nancy Tangler. She is the CEO and CIO at Laffer Tangler Investments, talking about all things markets right now. Again, S&P up 15 points, NASDAQ up 55. 10-year yield, though, at 4.22%. So bit of a green on the screen for equity investors. And with that, let's get some world and national news with Michael Barr.
Bailey Menace, thank you very much. The special counsel investigating President Biden's son has added a new 9-count federal indictment alleging that over 4 years, Hunter Biden failed to pay $1.4 million that he owed to the IRS. Former Republican Congressman John Katko.
It's unprecedented in the history of our country that a president's child is being charged with federal crimes. This is the first time it's ever happened. And they're upping the ante now. So I think this is a very significant move, and it's a very serious move.
Former Congressman Katko spoke to ABC. Prosecutors say Hunter Biden spent his money on drugs, escorts, and everything but his taxes. Police say a gunman who killed 3 faculty members at the University of Nevada, Las Vegas, was an unemployed professor who stuffed his waistband with ammunition before beginning the attack. Authorities say 67-year-old Anthony Polito brought a list of targets, although those shot weren't on that list. Sheriff Kevin McMahill is with the Las Vegas Metropolitan Police.
Polito was armed with a Taurus 9mm handgun. He had brought 11 magazines to the scene with him. 9 loaded magazines were found on his person after the shooting.
Polito died in a shootout with police Wednesday, minutes after opening fire inside a building housing a business school. A 4th victim, a visiting professor, is hospitalized with life-threatening injuries. The Kremlin is rallying support for Vladimir Putin's election to a 5th presidential term by pitching him as the defender of traditional Russian values against the liberal West as the war in Ukraine grinds on with no resolution in sight. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Nathan Hager. Stocks are pulling back on some of their gains from the top of the hour when we got better than expected short-term inflation expectations data from the University of Michigan. At the same time, bond yields are still spiking after stronger than expected payrolls data from the Labor Department for the month of November. Jeffrey Rosenberg, senior portfolio manager at BlackRock Financial Management, says when you put it all together, it may be getting a little bit harder for the market to price in more aggressive rate cuts from the Fed next year.
Bond markets in particular were really starting to price in a lot of cuts into next year and pricing them earlier and earlier. 3.7% unemployment rate, hard to see where the restrictiveness is coming for this Fed policy. So I think you're going to have a little bit of pushback in that narrative and that you're not really seeing the slowdown, particularly with the wage picture.
And we check the markets all day long here on Bloomberg. Right now, the S&P is up 4 points, or 0.1%. The Dow is up 61 points. That's a 0.2% gain. The Nasdaq's now little change to higher, up 8 points. The 10-year Treasury is down 22.30. The yield is up 8 basis points to 4.23%. Now the 2-year is at 4.69%. NYMEX crude now up 3%, trading at $71.41 for a barrel of West Texas Intermediate. COMEX gold is down 0.9% at $2,027.30 per ounce. The euro weaker against the dollar, 1.0772. That's a Bloomberg Business Flash, and Bloomberg Markets continues now with Bailey Lipschultz and Manus Cranny.
Thank you very much, Nathan Hager. Bailey Lipschultz and Manus Cranny filling in for Matt and Paul on this Jobs Day Friday. November payrolls rising 199,000, a bit above expectations. Unemployment rate falling 0.2% to 3.7%. We've been talking jobs all day, and that conversation will continue right now. We're joined by Joni Biley, the Chief Workforce Analyst at EmployBridge. Joni, thanks for joining us. Really seems like the labor market not really rolling over anytime soon.
Yeah, this was a really interesting report. If you look at the headline numbers, which everyone's talking about, right? Really strong growth, 199,000 jobs created and unemployment dropping down to 3.7%. So it seems pretty good. But then when you start digging into the report, there are definitely some things that are concerning me. As you look at this establishment survey, the job growth really was only in 3 sectors. It's the government sector, it's healthcare and education, and then leisure and hospitality. But it's pretty concerning that we're not seeing job growth in many of the other sectors.
Do you think that this is sort of a last hurrah from you've got the jobs being added back in from the auto workers strike? The bond market has been baying for rate cuts. The bond market has been very much ahead of these job numbers. Is this the last hurrah? Is it too aggressive to say this is the last hurrah in the jobs market?
Yeah, there's definitely mixed data in this report. And so I look at this and see the establishment survey and say, yes, that headline number might look really strong, but across the board, we're not seeing growth in many of the sectors. However, if you look at the household survey, which also is in this report, there is some incredible strength in those numbers. When you look at the overall size of the labor force, over 500,000 people said, okay, I'm going to participate in the labor force. And we've seen some growth there. And then as far as employed people in the household survey, that grew by 750,000 people in the month of November. So that's what really drove that unemployment rate down to 3.7%. So that is very strong. And, that could be happening for a few reasons, though. When you see people saying, yes, I'm coming back into the workforce and I'm going to participate, Certainly, there's some economic pressures, and we all know what we're dealing with inflation. I mean, people need to get back to work to put food on their table. You're going to have more people participate while it's still a pretty decent job market. So those numbers were very strong. But again, I'm going to come back to that establishment survey to say I'm a little concerned that we're not seeing growth in the professional and business service sector. Retail lost 40,000 jobs. When you look at, construction, it only added 2,000 jobs. And to your point on manufacturing, really that growth was due to just the workers coming back, certainly from, the strikes being resolved. So yes, I do think it's a mixed report, and I do think there's some concerns, in these numbers. But hopefully it will lead to, maybe that soft landing that we're all hoping for. We know these numbers are a bit of a lagging indicator, and hopefully things will start to look a little bit more optimistic in 2024.
And Joni, if we can focus just a bit on the wage growth, monthly wage growth rose more than forecast, but it does seem like it's starting to finally break to the downside. Obviously, all eyes have been on inflation expectations. The Fed has been calling out wage growth. What's your outlook from this report and going into 2024 when it comes to wages?
Yeah, no, it's a great question, and certainly something that we are constantly monitoring in this report, in our own data at EmployBridge as well. And we think that wages are going to flatten. Wage growth has been very strong over the last few years. It's been an employee market, and employees have been in demand, and they've been able to drive those wages up. But since things have started to soften and certainly shift, I would say that wage growth is really going to flatten. I don't think we're going to see big declines by any means, but I don't expect that we will see big increases into 2024.
And in terms of the bargaining power, this is something that we're trying to understand. If you look at the wage deals that have gone through by the auto workers, many would say that was just riding this ship. Do you think the bargaining, this is something that we're asking Mike McKee a little bit earlier on, the bargaining power and the wages component here, it was firm, it was strong. Do you think that rolls over?
Yeah, I do think that we're going to see a bit more of what I would say is just kind of normalization in the employment market. Overall, this still is a pretty good job market, right? We're at 3.7% unemployment. In the U.S., we still have more job openings than we do unemployed people. So employees are still in a good position, but that pendulum has definitely swung back a bit more to the employer. So it's kind of even right now and kind of normalizing, which I think will just lead to some stabilization in the market. So it's not that employees are in a bad position or won't be able to bargain, but it certainly is not as strong as it was a year ago or even 2 years ago.
And we spoke to Tom Gimble from LaSalle earlier in the show, and he kind of was pointing towards 2025 when we could see things start to potentially break, when things around a potential recession could start to creep in. What's your view on the timing for anything breaking in the job market?
Yeah, and I will say Tom and I both sit on the board of directors for the American Staffing Association, and probably have pretty similar views to what's happening. I would say that what Tom shared is probably pretty accurate, that 2024 might be just a bit stable. I don't think we're going to have huge declines, but certainly looking at 2025, I think we will start to see much more of an uptick in our labor market. I was just at a conference in Europe last week, and the European markets are definitely in a different situation than the U.S. They're looking at 2024 and 25 to certainly be a little bit more challenging, but coming out of it, hopefully by the end of 25.
Joni, we have about 10 seconds here. Any big expectations for 2024?
I think over the last few years, we've seen some really robust growth, but it has been softening. I would expect that we will still see growth in 2024, but the numbers won't be as strong. We're not going to see 200,000 a month or 300 or 400,000 a month. We'll probably start to see numbers kind of normalize around 100,000 to 150,000 a month of job growth. But overall, still a good labor market.
Thanks.
Not as strong as a couple of years ago, but not falling off a cliff either.
All right, we have to leave it there. Joni Biley, Chief Workforce Analyst at Employee Bridge. Thank you very much. This is Bloomberg. And now let's get some company news with Bloomberg, Steve Rappaport. Steve.
Hi, Bailey. Shares of DraftKings are up 1.5% despite word of a lawsuit against the sportsbook. Details from Bloomberg's Jeff Bellinger.
Steve, a class action suit accuses DraftKings of unfair and deceptive advertising. The Public Health Advocacy Institute says the terms to qualify for a $1,000 bonus bet are too onerous. The lawsuit says the promotion is designed to make new customers believe they'll receive a $1,000 bonus after depositing money into their account. But to get the grant, a customer has to deposit $5,000 and wager $25,000 within 90 days. Steve?
Jeff, shares of the Boston-based company more than tripled this year. Microsoft got the blessing from UK regulators to merge with Activision Blizzard, but the tech giant might not be as lucky when it comes to its partnership with OpenAI. The Competition and Markets Authority says it's gathering information from stakeholders to determine if the collaboration threatens competition in the UK. Right now, shares of Microsoft up less than 0.5%. And the trailer for a coveted video game sets a streaming record.
Look who's back. The only way we're going to get through this is by sticking together, being a team.
YouTube says the first trailer for Grand Theft Auto 6 generated 93 million views in just 24 hours. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Bailey Lipschultz and Manus Cranny filling in for Matt and Paul. Busy jobs day Friday, talking all things markets. Before we get to that, let's get some world and national news with Michael Barr.
Thank you very much, Bailey. Manus, Hunter Biden has been charged with 9 new federal tax-related charges. 3 of them are felonies. Justice Department appointed special counsel David Weiss filed the new charges against the president's son, former Republican Congressman John Katko.
The bottom line is this is a sign that the Department of Justice is not in the back pocket of President Biden.
Former Congressman Katko spoke to ABC. The special counsel accused Hunter Biden of engaging in a 4-year scheme to not pay at least $1.4 million in self-assessed federal taxes. Second Gentleman Doug Emhoff was the headline speaker at last night's National Menorah Lighting in Washington, D.C. On the first night of Hanukkah, Emhoff highlighted the dangers all Jews face with rising anti-Semitism.
I know you're in pain. I'm in pain. I know a lot of us are feeling unmoored and afraid.
In Albany, New York, gunfire outside a Jewish synagogue is being investigated as a possible hate crime. Since the October 7th start of the Israel-Hamas war, law enforcement agencies have warned of a spike in anti-Semitic and Islamophobic crimes in the U.S. With Ukraine aid now stalled in Congress, administration officials are pointing out the dire circumstances Kyiv now faces. Bloomberg's Nancy Lyons reports.
National Security Council spokesman John Kirby says the clock is ticking and Congress is almost out of time.
We've got a few more weeks here, and then we're out of Schlitz when it comes to helping Ukraine with this kind of security assistance that we've been able to provide. And that's just, that should be unacceptable to everybody.
Republicans say they'll only approve aid to Ukraine if major changes are made to U.S. immigration policies. The Pentagon says it's been pulling our weapons off shelves and shipping them to Ukraine, and if we cannot backfill those supplies, it'll impact our own readiness. In Washington, Nancy Lyons, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Manus, Bailey?
Thank you, Michael. Bailey Lipschultz, Manus Cranny. Riding into the 11 o'clock hour, Manus, winding down the time. You're keeping an eye, though, on commodities.
Yeah, I can smell the weekend. There you go. That is how close it is. I've come to understand this fascination in this country of yours. Unlike Ireland, the roads are not great. Gas prices. This is important. This is politics meets inflation, meets the Fed. And this is where gas prices, if you look back at the beginning of September, at the end of August, at the end of the driving season, $4.40 at the pump, now down to $3.76. That is important. It is important from the inflation narrative, from the Fed narrative, from the consumer narrative. You've remortgaged, you're driving cheaper. I mean, what's not to love for Christmas?
No, everything you could ask for. And as someone who has a car in New Jersey, is originally from California, where gas prices are seemingly far higher than they are anywhere else in the country, except for a couple of states, it definitely benefits the consumer when you're spending even just the sight of it being at a $3 handle, as opposed to grimacing through $4, or even when you go back to 2022, when national average hit just below $5.50.
And don't forget that oil has had a torrid time, 7 weeks of declines. And again, I bring this back to the much larger picture, which is 6 to 7 weeks ago, it was $100 oil, $100 oil. And I go, okay, it's not $100 oil now, is it? It's 7 weeks of declines. And that is with a concerted effort by the organization, which is OPEC Plus outside the United States. And the United States is exporting near record amounts of oil. Yes, oil's trying to galvanize itself today. It's up at 2.5% in Brent at 75.81 and WTI at 71.13. Yes, it's bouncing, but it's been a pretty tortured week. I think commodities is an underbelly story in the inflation narrative.
Yeah, it'll be interesting to see how that plays out in 24. JP Morgan saying the oil supercycle thesis remains intact, with long-term demand set to remain strong. So oil rebounding alongside markets. We'll have more Bloomberg Markets coming up in the next hour, and it all starts right now.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Bloomberg Markets, Bailey Lipschultz sitting in for Matt and Paul, who are off, joined now by Nathan Hager, who's helping pinch hit as we fill in the roster. But first, we will head to Charlie Pellet for an update on the news and markets.
Thanks very much, Bailey. We are looking at an update for the Dow, the S&P, and NASDAQ jobs Friday. Treasury yields climbed after solid readings on U.S. jobs, and consumer sentiment bolstered speculation that bets on Fed rate cuts next year may have gone too far. Ira Jersey is chief U.S. interest rate strategist at Bloomberg Intelligence. And we'll get his comments a little later on. Around Wall Street, the prevailing view is that while economic strength makes investors less apprehensive about a recession, at least for now, it also means that the Fed might have to hold rates higher for longer. Here's where we stand in terms of equity markets. We do have the Dow up by 114 points right now. S&P up 14, gain there of 0.3%. NASDAQ up 55, a gain of 0.4%. NASDAQ 100 index up 56, a gain of 0.4. 10-year yield 4.24% with a 2-year that's yielding 4.71%. Gold down $20 the ounce to $2,008 right now, a retreat of 1%. And West Texas Intermediate crude up 2.7%, $71.20 for a barrel of WTI. So again, recapping, we are looking at an update here. After earnings, shares of Broadcom up by about 0.1%. Lululemon Athletica, they are up by 4.8%, but heading in the other direction. RH, an upscale home furnishings retailer, RH plunging now by 13.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Bailey Lipschultz with Nathan Hager, who is joining virtually. You can hang out with us by streaming on YouTube. Just go on YouTube, type in Bloomberg Markets. We should pop up, or in your car, Apple Play, streaming through the radio. You name it, Nathan.
Keep your eyes on the road, please.
Do not stream in your Tesla if you're listening.
We will have audio streaming in the Tesla, absolutely.
We do have a pretty packed hour. Ben Emmons, head of fixed income at New Edge Wealth, will be joining us, as will the CIO at Angeles Investments, Michael Rosen, on a busy jobs day. S&P right now up 16 points, Dow up 125 points. So some green on the screen. But right now, for market drivers, we are joined by Bloomberg Equities reporter Nora Melinda. Nora, what is going on under the hood on this Jobs Friday?
So we've got Paramount Global up as much as 14% this morning. It is the biggest gainer in the S&P 500 today, hitting its highest intraday level since July of this year. Those shares are up after a deadline report said that David Ellison and Redbird Capital have expressed interest in the firm. David Ellison, of course, is well known for being an American film producer, a son of a multi-billionaire Larry Ellison, and founder and CEO of Skydance Media. But really, what's in it for them? While there's a lot under the Paramount umbrella, they may not necessarily be clamoring for. Making a play for Paramount's Class A voting shares would give Redbird and Skydance control of the conglomerate without buying it outright.
It's interesting to see interest in a company like Paramount Global when we've seen so much pain in the media sector, particularly with the way the advertising market has been. But to see these shares start to pop up a little bit and to see a company like this getting interest is really interesting, Nora.
Definitely, and investors feel the same. I mean, with it being up as much as 14% this morning, investors are really seeing some optimism behind this news. So we'll just have to wait and see how this progresses. But the company still has failed to comment regarding whether or not this, making a comment on this. But everyone's watching it.
Yeah, seeing some strength in Paramount as well as Warner Brothers Digital, Warner Brothers ticker WBD. Nora, you pointed out before the segment, First Solar. We've seen the solar stocks really taking on the chin this year, among the worst performers in the S&P 500, but FSLR right now up about 3%. What's going on?
Yes, so that stock is up relatively okay this morning. We've got energy as the best performing sector in the S&P 500 this morning, and First Solar really popping after Morgan Stanley upgraded the stock to overweight and raised its price target to 237. As we know, oil and energy is rebounding as technical levels have provided support as the U.S. sought to refill its strategic petroleum reserve. But this is a stock, First Solar, that I'm really watching. Based in renewable energy, it designs and manufactures solar modules.
And also, we've been watching all morning long since we got the word that Honeywell is looking to acquire at least a piece of Carrier Global's business. Both those stocks have really been moving pretty significantly all morning long.
Yes, pretty large in focus this morning. Honeywell did say that it will acquire Carrier Global for $4.95 billion in an all-cash transaction. That jet engine and gas detector maker has been pushed by investors for quite some time to juice up its growth through larger deals. So this is very welcome news for the stock. And Honeywell shares are falling as much as 2.4%, but pairing a little bit of those losses this morning.
Yeah, Nora, one stock that's standing out to me among the better performers in the S&P 500, Lululemon. They started out in the red. Now we have analysts talking about how they beat the high bar of expectations. Ticker is LULU. Last 12 months, up 30%. I don't know if you're a Lulu fan, but it does seem like consumers are continuing to spend on those.
Yeah, I mean, Lululemon is gaining after its third quarter results met a high bar. So we've really got analysts coming in support of Lululemon. I personally still haven't purchased any products from them, but I know lots of people who shop there. So happy to hear the news nonetheless.
Is there any read-through from what we're seeing with these analyst calls on Lululemon to some of the other competitors in the space?
I mean, yeah, we are seeing some of its competitors rallying in sympathy, but all eyes are on Lululemon this morning with its earnings beating expectations.
Yeah, it seems like the market's still rallying. Jobs being shaken off. Initial read, Nora, was too hot to handle, and now definitely feels like the market is continuing to rally. Maybe too early to call it a Santa Claus rally?
I mean, I guess we'll see. We'll see. We're in December now, so.
Getting close to mid-December here. Yeah, I guess there's still time to see whether we get to that Santa rally, the November rally, of course. So much expectation and excitement around artificial intelligence, the weight loss drugs. Yeah, I guess we'll have to see whether Santa Claus comes to town for investors. Thanks for this, Nora, Melinda, checking stocks to watch for us this morning.
And Focus on Munis is brought to you. This is our Focus on Munis segment. Focus on Munis is brought to you by Build America Mutual. Insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. And with that, we are joined now in studio, Interactive Broker Studio, with Joe Mysak, columnist with Bloomberg News, talking all things munis. Joe, thanks for joining us. What kind of is standing out, looking at California's deficit budget and kind of all things happening in the muni world?
Oh, wow. It's nearing the end of the year here, and the news just keeps on coming. It's insane. It's just this California thing really did shake a lot of people up. $68 billion deficit.
Oh, yeah.
They're looking, at a cumulative one, much larger, obviously. And it's just one of those things that shows you California, really relies on its the high-income taxpayers, and they just didn't do that well this year. And the revenue came in much lower than expected, tax revenue. Now, this is kind of a harbinger, I think you could say, for many states. They've already seen tax revenue dented for one reason or another. And of course, we no longer have the federal aid is running out. Many of these states and localities are still spending and using some of that money. So it's going to be interesting in the new year to take a look at which states, which municipalities suffer the most.
It's interesting to think about it that way, Joe, because often I think a lot of people might think that California is kind of its own animal with the sort of high tax levels that have sent a lot of residents packing for a lot of low tax states. What other states could we be looking at that might have the same kind of fiscal concerns that California is facing and has been facing now for more than just this year, right?
Well, it's funny you bring that up, especially California as its own entity, Republic of California. Well, certainly nothing is going to show as big an impact as California. Just just the sheer size of it. But as you say, there are going to be other states and localities around out there that all of a sudden, you look at it and say, wow, what happened here? I mean, right now, I can tell you, New York City. New York City has spent a lot on the migrant crisis, if you will, and Mayor Adams has asked his departments to take a look at making cuts. So that's another one we're going to take a look at. But again, when you say California, New York City, none of these places are in danger of going into default. I mean, they do bring in so much cash, and they have so much flexibility at this point in time, especially post-pandemic, where they did receive so much aid. So you got to say, like, well, don't jump to conclusions just to get exercise.
And Joe, you're talking about states and regions that bring in money. Looking at your column from a couple days ago, Taylor Swift, rodeo, Super Bowl helped Las Vegas regain momentum. Everything's gone. I mean, T-Swift could be back in Vegas if the Chiefs are playing in the Super Bowl. So that's like a double barrel win for the city.
The economic tsunami that is Taylor Swift, and
she's got the whole economy on her back. That's right.
Man, Las Vegas, they just turn on the power. But it's taken, I looked at the numbers there, especially because I said, wow, Las Vegas is sort of a proxy for tourism nationally. But it's the biggest, it's the leader, okay, in tourism and convention activity. They have something like, they have more than 150,000 hotel rooms, which is almost insane. It's not the kind of thing you see a lot of. But I said, let's take a look at how they're doing. And it is taking them 5 years to get over the pandemic. So that gives you an idea of how other locations are doing. So it was fascinating. And then, and on top of that, this year they had the Grand Prix, and they had Taylor Swift, and they had Beyonce, and they have and it's funny, I asked the people out there, the Las Vegas Convention and Visitors Authority, I said, what do you have coming up? And they said, well, in January we'll have the Super Bowl. We'll have the Super Bowl, and we also have the World of Concrete.
What?
Show. World of Concrete. Fascinating. But,
so exciting.
That gets that really the World of Concrete convention gets 50,000 attendees.
To that point, I mean, that tells you that the convention business is coming back. I mean, you might think that concrete's boring, but for the people who are in it, and for any of these other conference participants that are coming in from any other industry, where Las Vegas has been the place to go for so many years, yeah, that's a pretty positive sign.
Absolutely, and it's so funny, there are some municipalities, they'll sell bonds for a convention center or a convention center hotel, and they'll put in there their projections, and Las Vegas is not threatened by any municipality in the United States. It just is such a powerhouse in the convention business. But as you say, you made a very good point. The convention business is coming back. People, it's one of those things, people keep writing it off like, oh, wow, who wants to do that? It turns out we all do. We want to get out
travel.
and have,
exactly.
Contact with other human beings.
Joe, I'm a big equities guy, and S&P in November rallied almost 9%. Looking at a story from your colleague Martin Braun, muni bond funds surging almost 12% in November using leverage. What's going on? Because at least in the equities world, you talk munis, it seems like a snooze fest.
Snooze fest. Thank you. Yeah, these are Martin.
This is the most exciting segment. Come on, Bailey.
No, I know. I'm sorry. Anything about T-Swift in Vegas, though, has me intrigued.
Exactly. Exactly. Yep.
Well, these closed-end, some of these closed-end funds that use leverage are especially when you're coming out of a period of the Fed raising rates, are going to be doing very well coming up. And Martin, focused on this specific piece of the market because there's not tons of closed-end funds that use leverage. And yeah, that's just going to pile in there. And I believe he spoke to one portfolio manager who, has loaded up on these, knowing that, wow, these are going to really gain now. Because the muni market in general, in November, I think we had the best, month since 1986. So, we're going to see continued very good performance, I would imagine, unless we have some catastrophe where the Fed has to start raising rates again.
Well, on the other side of the coin, we got to talk about another one of your columns from earlier this week about some of the worries that muni investors are thinking about when it comes to the risk of default from senior living facilities. What's happening there?
Oh, man. It's just a very sad story. Is it not? Yeah. I mean, these senior living facilities have had a very hard time since the pandemic. And right now they account for something like almost a third of the defaults we've seen this year in the muni market. And as you know, default is very rare in the municipal bond market. We usually have a default rate for most munis of well under 1%. But these senior living facilities, that is what Hilltop Securities, Yafa Ratner, the analyst there for high yield, she does this annual survey. And the senior living sector, if you will, is something that has been on buyers and analysts' screen for years now. I was especially surprised at one segment that showed up in this survey this year. It arose from the 8th most concerning thing, which is basically no one cares, to second place, right behind senior living, and that is higher education facilities closing. Shocking.
I guess when you kind of look at this, Joe, we only have about 20 seconds left. Kind of what's the expectations for some of the areas that are going to be more attractive or more active in 2024?
Well, right now, the big thing on most bankers and analysts' minds is going to be more volume, more sales, new bonds. This year was sort of depressed most of the year. We're back to the level that we had in 2022, about $350 billion. And next year, they're looking for $450 billion in new money.
We have to leave it there.
That's it?
I know. Thank you, as always, Joe Mysak, columnist with Bloomberg News, talking all things munis, senior living centers, Las Vegas, Taylor Swift, Super Bowl, even...
Let's talk more about Las Vegas.
Well, my beloved home state of California,
Absolutely.
It's fine.
Yeah,
Things
right up the I-15, right?
Exactly. Run up the I-15. Anyway, market's relatively flat on the day, so we will continue this market conversation. This is Bloomberg. Now let's get to some company news with Bloomberg. Steve Rappaport. Steve.
Hi, Bailey. Microsoft's partnership with OpenAI could be coming in for more scrutiny overseas. We get the details from Bloomberg's Joe Easton in London.
There's been a dramatic few weeks for that company, hasn't it, with that big change over at OpenAI. But Microsoft, once again, is in the crosshairs of the UK competition regulator, which is investigating its $13 billion investment in OpenAI. They want to look at who is in control of those two companies. And it follows the UK CMO almost blocking their purchase of the video game maker Activision Blizzard. So it's not their first fight with the UK regulator.
That's Bloomberg's Joe Easton reporting from London. A warning for Novo Nordisk shareholders. Remember that ride that capulated the company to the top of Europe's equity pile? It's set to stall in 2024 as the hype around its weight loss drugs begin to fade amid competitive pressures and supply challenges. That's according to analysis from Jefferies Financial Group. The Ozempic and Wegovy maker became Europe's most valuable listed company this year, and the shares are up 42% so far in 2023. And Tesla is being hit with a series of fines from California regulators. That's after an employee was seriously injured when she got stuck in a car on a conveyor belt at its factory in Fremont. The state's Division of Occupational Safety proposed a total of $38,000 in fines. The EV maker, though, is pushing back on that. And we have shares of Tesla right now up less than 1%. I'm Steve Rappaport. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long at Bloomberg. Little change for the U.S. stock market right now. Those earlier jobs Friday gains are fading. S&P 500 index now higher by 1 point. We've got the Dow up 9 points, giving up earlier gains, while NASDAQ, the composite index, is up 7, a gain there of less than 1/10%. The NASDAQ 100 index is down 1 point, also little changed. 10-year yield 4.24%, with a 2-year right now 4.71%. Spot gold down $22 the ounce to $2,004, a drop of 1.2%. And West Texas Intermediate crude oil lower by actually higher now, 2.7% on WTI at $71.19 a barrel. Micron Technology has struck a union deal for construction of a $15 billion chip-making facility, potentially giving the company an advantage in the fierce competition for federal funds. The accord for the Boise, Idaho plant is a rare example of an organized labor agreement in the country's semiconductor industry, which Washington is trying to rebuild with subsidies worth $100 billion under last year's CHIPS Act. We got Micron up for a second day, gaining now by just about 1.1%. Again, recapping, we're looking at a stock market that is little changed. The Dow now swinging between gains and losses. S&P up by less than half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet, Bailey Lipschultz, and Nathan Hager hanging out with you here on Bloomberg Markets. Paul and Matt are both off. Busy jobs day Friday right now. Looking at the markets, you've got the S&P relatively flat, as is the Dow and the NASDAQ, but keeping an eye on the 2-year yield at 4.71% and on the 10-year 4.24%. Right now, we are joined in the Interactive Broker Studio by Ben Emmons. He is the head of fixed income at New Edge Wealth, talking the markets, talking jobs. And what stands out to you? Because the headline numbers seemed hot, but there are a lot of things to kind of look at under the hood on this report.
Yeah, what I was looking at this morning was the ADP report first, and I noted that the leisure and hospitality was negative in the ADP report. And ADP is leading in some of the sectors, NFP reports. So I was surprised to see a 40K gain in leisure in this report. And it jumps out because there's a lot of job growth out of that sector of the last years now, and it's very consistent. So it's still not slowing down. And I take comfort in saying, like, well, this job market may be quote unquote loosening if you think of the job openings, or you think of even if you can tell someone in continuing claims or other measures. But you think of leisure, that's like a growth engine for this job market. And that's, I think, positive against, look, it was good to see this influx of people back in labor force, as your other guest was talking about. And as your other guest was talking about. But what is important there to note is that the share of foreign immigrants as part of the labor force, that's increased now up to 20%. So I think what's going on the last few years is that as we get more people coming into the country, they get into the labor force and find work really quick. And I think that's a really important development, because if that continues, not only that keeps the job market like humming and going, it also is for productivity really important. And so the average hourly earnings, although they were up, but it was like 0.4% versus forecast 0.3, you know, that's not like a dramatic increase such that that's really because of the effect from productivity. So it is in a way a Goldilocks number, a Goldilocks report, and why the markets are as they are. I mean, you would expect yields to jump by this much, and you would think that stocks would rally, and that's exactly what's going on. So again, a jobs report that says to me, this is an economy that does not warrant this excessive amount of rate cuts that we're seeing being priced in the market.
Hey, Ben, it's Nathan in D.C. Good to speak with you again. Does that mean that you're thinking that this job market is going to continue on this trajectory of the kind of growth that we have seen that's defied so much of what economists have been expecting for literally months now?
Yeah, it does look like that, Nathan, because, you know, the strikes, you see it being added into the headline, but the strikes itself did not have ripple effects in the economy that some people feared, like meaning you would get widespread job losses because of all the disruption, against somewhat of layoff trends that are ongoing, and the job openings declining. That is really just a marginal loosening of the labor market that allows other people to come back in and find work. So it's a competitive labor market. It's a market with momentum. You know, the Kansas Fed puts out a labor momentum index, and I noted that index actually has barely changed over the last sort of 6 months, meaning it has not really declined in any way, even though you're seeing, like, for example, job openings declining or other indicators declining, which means loosening. It does indicate that people can find work and that there's momentum in this labor market.
And Ben, I'm looking at the warp function right now. We've got about a coin flip odds for a first rate hike in March, and it looks like just over 4 expected in 2024. What's the market's read on kind of where the Fed sits, where we can take some of this data?
Yeah, if you take today's report, it does not argue that the Fed should go ahead and match market expectations. But we got to take note of what happened in June. They actually had penciled in 100 basis points of cuts at that time, and then revised it in September the 5th, right? And now the market's back to 100 or plus. So they could actually go back and say, hey, guess what? We'll just go along with the market. But I think a report like this probably tells them, like, we don't actually have to. It's really, you know, highlighting how we think about the economy. It's moderating. It is a softer landing, even though that's not the official language. But it's an economy where they've done enough with restrictive policy rates so that it can get to a better, stable, state. And as a result, you don't have to necessarily forecast all those rate cuts. And I think that's next week, the tension in the markets. It will be, I think, somewhat taken back, where Powell will be, well, it sounds hawkish, but really will saying, like, see, we have enough data points to prove to you, markets, that these rate cuts are probably overextended. And as he said in his speech a week ago, you know, he diffused the speculation there. You don't need to speculate on rate cuts. And so I think that will be a big message next week.
Yeah, I wanted to ask whether the narrative shifts when we get that inflation data next week. What do you think we're going to see from CPI?
Yeah, there will be pressure on CPI from the energy effect over the last month or so, Nathan, because that clearly will filter through now. And you can tell, right, from the nowcast of CPI or how the market is pricing CPI. I think that's fairly accurate. On the other hand, the sticky items that we've been following for many months probably stay stickier. You know, that does not seems to be too much movement yet to happen there, even though the last CPI report was such a, I guess, groundbreaking data point of the, you know, owner's equivalent rent finally declining as the pandemic pressure gets out of that component. So that will be the big topic for next week too. Will that see a continuing decline? If so, probably the market will take it favorably. But for the Fed, it's all, again, playing in their hand and their message, like this is what they have been forecasting and what they've been expecting. So to them, it's more of a vindication of that their restrictive policy is working.
And looking at some of the granular data, I keep coming back to wage growth because it does seem like the Fed is very much fixated. Obviously, that's a big driver for inflation. When you look at the print from today, when you look at expectations into 2024 for wage growth, how does that play out? And how does that factor into inflation and what the Fed can and will do?
Yeah, the wage trackers from the Atlanta Fed have all shown a moderation in most sectors, including the leisure sector. I think it's on a somewhat of a soft landing type path, just like how inflation has come down in a soft landing mode. And as basically the economy since 2021 has been declining down. So, and it's also effective productivity, right? We have a significant productivity pickup this year, so wage growth should start to moderate. As more people get in the labor force and you're getting somewhat of a let's say supply and demand, rebalance, and therefore that wage pressure eases off. Again, that is favorable to the economy because it doesn't mean like it's outright wage deflation, first and foremost. Second, the real wages are likely going to be improving given that what inflation is doing. So I do think it's a positive development. Look, the average hourly earnings were a little bit up this today in this report, but not like alarming. The effect from the UAW negotiations, for example, isn't yet coming really through. So I'm not so sure if it's a wage price spiral idea. It's more of a moderation.
So is there room, Ben, for rate cuts of any size next year? I mean, I know there's still a debate about, whether we're going to see cuts as aggressive as the market's been pricing, but do you see cuts in any stretch next year?
So I find this a really important question, Nathan, because think about what we're going to go into next year. It's an election year, and the tension will be about the economy, obviously. And we know that if you keep rates too restrictive, that could affect the economy really negatively against whatever fiscal stimulus that we're still pumping into the economy does start to fade off. And if you take it against that backdrop and the Fed continues to make ground against inflation, then it has put out this framework to manage this politically, saying, look, we have a high rate, we can bring it somewhat down as inflation is declining because, the difference between the nominal rate and inflation is getting wider and therefore leaves some room to have the nominal rate go down. And that will be your rate cut. But it's literally taking out the most restrictive part from the Fed funds rate a little bit down. It's like insurance rate cut, as I say, that protects you against the downside for the economy. It's nothing about like an alarming rate cut. Okay, we got to ease policy really aggressively because we're about to slip in a major downturn.
We've got to leave it there. Ben Emmons, thank you so much, head of fixed income at New Edge Wealth, joining us here in the Bloomberg Interactive Brokers studio. Again, all eyes on the jobs report and some of the data that we've been seeing. It does seem like the market still is betting on Fed cuts starting next year in March. Now, let's get some world and national news with Michael Barr.
Bailey, Nathan, thank you very much. New charges against Hunter Biden. A grand jury returning a 9-count indictment against the president's son. That's new. Hunter Biden now accused of failing to pay at least $1.4 million in federal taxes while allegedly taking false deductions. Bloomberg's Kevin Whitelaw has more on the case and what it means for President Biden's reelection bid.
This indictment, which is a 9-count indictment, includes 3 felonies, all relates to tax fraud. And of course, with the way the U.S. legal code works, that really ends up amounting to a fair amount of potential prison time for Hunter Biden, theoretically up to 17 years, in fact, if he was convicted with the maximum. That's probably not what's going to happen in these cases. Having said that, for President Biden, he's going to be answering questions about his son a lot. There's obviously no allegations of the president doing anything wrong in this particular case.
Bloomberg's Kevin Whitelaw. The case was expected to end with a plea deal before it imploded over the summer. The new charges are in addition to federal firearms charges in Delaware alleging Hunter Biden broke laws against drug users having guns. Police in Albany, New York say they have arrested a 28-year-old man who fired a shotgun outside a synagogue just before the start of Hanukkah. Authorities say he will be investigated as a hate crime. Officials in Atlanta credit Good Samaritans with helping to save Martin Luther King Jr.'s birth home from an apparent arson attempt. Police say that the tourists restrained a woman who threw gas on the house until police arrived and arrested the 26-year-old suspect. Atlanta Fire Department Battalion Chief Jerry DeBerry.
If the witnesses hadn't been here and interrupted what she was doing, I mean, it could have been a matter of seconds before the house was engulfed in flames.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Wall Street, we do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, all in the red, a turn lower since our last update. Bond yields are jumping as Fed pivot bets look overdone. Right now we have got the 10-year yielding 4.25%. 2 years at 4.71%. Equities now lower across the board. The S&P 500 index, a little change, down 4 points, down less than 0.1%. The Dow down 12, a decline there of 0.1%. NASDAQ lower by 11, a drop there of 0.1%. Spot gold now lower by $23 the ounce to $2,004, a decline there of 1.2%. And West Texas Intermediate crude is up 2.5%, $71.04 for a barrel of WTI. Well, how does today's jobs report play into rate cut expectations, and what are we likely to hear next week from Fed Chair Jay Powell? Ben Ammons is with New Edge Wealth. He was interviewed moments ago right here on Bloomberg Markets.
I think that's next week, the tension in the markets. It will be, I think, somewhat taken back, where Powell will be, well, it sounds hawkish, but really was saying, like, see, we have enough data points to prove to you, markets, that these rate cuts are probably overextended. And as he said in his speech a week ago, you know, he diffused the speculation there. You don't need to speculate on rate cuts. And so I think that will be a big message next week.
And you can hear more of the conversation on the Bloomberg Markets podcast, the Tape podcast. You can download it wherever you get your podcasts. After earnings, Broadcom now down by 1.2%. Lululemon Athletica after earnings up by 4.7%. RH, the old Restoration Hardware, that stock now plunging by 14.7%. Again, recapping, stocks have turned lower. The S&P down 3 now, a drop there of less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
And thank you, Charlie Pellet, Bailey Lipschultz, and Nathan Hager, respectively, in New York and D.C., filling in for Matt and Paul on this Jobs Friday. As Charlie mentioned, Nathan, markets, at least from the equity perspective, kind of ping-ponging back between the red and the green, but we do have a pretty big jump in both short and long-term dated yields.
Oh, I know. The sell-off in bonds continues after the stronger-than-expected jobs report. I guess after the sentiment data and what we saw from the Labor Department, equity investors are still trying to figure things out, maybe.
Yeah, a lot going on from the economic front. We will have another busy week next week, as we've been talking about in terms of CPI and some jobs data, obviously the Fed decision. And with that now, bringing in Michael Rosen, he's the CIO at Angeles Investments, joining us by Zoom. Again, you can be watching us on YouTube, also streaming through your car, Apple CarPlay, or on the traditional flagship Bloomberg Radio Network. Michael, just looking at this reaction, we're seeing that sell-off that Nathan mentioned in bonds, kind of a ping-pong whiplashy stretch of months here. Kind of what is your read on today's readout and kind of how the markets are reacting?
Well, you're right. The market is sort of coming full cycle. We've had a major sell-off with yields rising throughout the summer, moving from just under 4% or so, or actually closer to 3.25%, all the way up to close to 5%, and now coming back down, and essentially yields are where they were back in August, September. So we had a run-up in yields, which in my view was really just a reflection of the reality. The market expected the Fed to cut aggressively, and it became clear through the summer that that was not going to happen. The steeply inverted yield curve really made no sense. And the market came, I think, around to reflecting that reality. In the last month or so, we've seen some weaker economic data. It does seem likely that the Fed is done hiking interest rates, and that sort of sparked the massive rally that we saw. With the new data we've seen today, we've seen that the market is maybe recognizing it's getting a little ahead of itself. The Fed's been very clear that it's in no hurry to be cutting interest rates. despite what the market thinks and despite what the market has been actually pricing in for the last 2 years now. The market's been way more aggressive in anticipating Fed easing than the Fed has been willing to acknowledge. So I think the market's just sort of coming around to being a little bit more in line with the way the Fed has been positioning.
Well, that raises the question, is that going to stick?
Yeah, I think from an investor standpoint, I just don't feel yet that it's an opportunity to necessarily move out in duration. The curve is still inverted. You're giving up yield by moving out the curve. There's simply no evidence that we're going to have a significant recession that would cause the Fed to cut interest rates massively, and so. I think staying still fairly short end of the curve still makes sense from an investor standpoint, and just not really tempted by yields at 4.25 on the 10-year.
And what can change that? I'm just looking at the warp function. We're seeing 50-50 shot essentially of the first rate cut in March, and right now the market pricing in 4 in 2024.
No, exactly. And look, I just point out that for the last 2 years, the market's been anticipating an imminent Fed cut, and that just simply hasn't happened. And I think, like a stopped clock, it'll be right at some point, but it just again still seems a little premature. I mean, what is the impetus for the Fed to cut interest rates when we have an unemployment rate close to 3.5%, 70-year lows essentially? And inflation, while coming down, is still well above their target. It just seems like there's no reason for the Fed to change its monetary stance at the moment. And so while 4 cuts in rates next year is, I suppose, possible, it seems still a bit aggressive.
Well, what's more probable then for the Fed's policy stance? Do you think we are going to see cuts next year? Multiple cuts, perhaps?
Yeah, we will. I just think it's going to be a little later than what the market thinks. As you noted, on the March 20th meeting, there's about a 50% likelihood of a cut. That's what the market is pricing in. I take the under on that one. I think the Fed's going to wait before actually cutting rates, and then I think they'll do so rather gradually. Again, unless there's some major shock to the economy, which I think is less likely today. I think the Fed will be gradual in its easing policy, and again that means, given the inversion of the yield curve, investors I think are still going to do better by staying in the shorter end of the curve.
I was going to ask Michael, just with that in mind, how should investors be playing it? Looking at a story that Reed spiked and has been all over the terminal in Bloomberg News, saying that the new 60-40 math shows owning bonds is costing retirees trillions, and research finds all-in stock investing actually provides better value.
Well, that's certainly true over the long term. The issue for investors, and look, we've seen good data on this. I think Morningstar every year puts out a report on what investor trades take away from returns. Investors have a good habit of selling low and buying high, and hurting their overall returns. If you can withstand the volatility that comes with equities, clearly the way to accrue wealth over time is modest but consistent contributions into equities, and never sell. And I promise, in 30, 40 years, you will have quite a lot of money if you can withstand that. But most investors can't withstand that, and that's why there's a desire to have a little less volatility in their portfolios, even if it means giving up returns.
Yeah. And Michael, I guess we've got about 10 seconds here. Any expectations for when we see that first rate cut next year?
I think we're looking more like into June or July before we see the first cut.
Gotcha. No, that is Michael Rosen, CIO at Angelus Investments, talking all things fixed income. Nathan, we got, as you mentioned, a sell-off across duration in terms of yields right now playing out after that jobs report. Interesting, though, it feels like everyone I talk to is pushing back against the Fed cut narrative, but we still have 4 priced in.
Yeah, interesting to see the real big spike, like he was mentioning in the 2-year. A lot of yield spiking there on the short end of the curve.
Yeah, yields moving and equities staying flat. Stay with us. This is Bloomberg. Now let's get to some company news with Bloomberg's Steve Rappaport.
Hi, Bailey. Shares of Microsoft are up after the company announced it would convert temp workers to unionized employees. We get more on that from Bloomberg's Denise Pellegrini.
Well, Steve, it's probably safe to say it's fair to view this as a big victory for organized labor in a big tech world that typically shuns unions. Microsoft in January agreed for the first time to collective bargaining with ZeniMax Workers United, an affiliate of the Communications Workers of America. ZeniMax represents about 300 quality assurance workers at a Microsoft-owned video game studio, and the CWA says contract talks have been underway since April. Microsoft, for its part, says it looks forward to continuing good faith negotiations. Steve?
Thanks, Denise. Honeywell International stock is lower after it announced a big purchase. Bloomberg's Joe Easton reports from London.
Honeywell buying the security division of Carriers. Now, this is a $5 billion deal. It is the electronics locks business of Carriers. Honeywell has a market cap around $130 billion itself, so it won't be a huge company to digest for them.
That's Bloomberg's Joe Easton reporting. And the Federal Trade Commission is asking Hess and Chevron to provide more information and documents regarding their proposed $53 billion merger. It's the second request from the regulator. The companies say they expect to promptly respond this time as they seek to complete what would be the second largest merger of oil giants this year. The FTC is also investigating Exxon's bid to acquire Pioneer Natural Resources. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming up.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt and Paul are off. Bailey Lipschultz and Nathan Hager filling in Jobs Day Friday. Markets on the equity side relatively flat, but before we get into that, let's get some world and national news with Michael Barr. Michael.
Bailey, Nathan, thank you very much. The special counsel investigating President Biden's son has added to the charges against him. A new 9-count federal indictment alleges that over 4 years, Hunter Biden failed to pay $1.4 million that he owed to the IRS. Former New York Republican Congressman John Katko.
I don't think it helps either side. It certainly doesn't help the president that his son is the first child of a sitting president to be charged with federal crimes. But it also doesn't help the Republican side, who one of the theories is that the administration is corrupt and that they're protecting criminal conduct.
Former Congressman Katko spoke to ABC. Officials in Atlanta credit Good Samaritans with helping to save Martin Luther King Jr.'s birth home from an apparent arson attempt. Police say tourists were walking by King's birth home last night when they saw a woman pouring gasoline on the windows and bushes of the house. They intervened when they saw her pick up a lighter. They restrained her until police arrived and arrested the 26-year-old suspect, Atlanta Fire Department Battalion Chief Jerry DeBerry.
If the witnesses hadn't been here and interrupted what she was doing, I mean, it could have been a matter of seconds before the house was engulfed in flames. It was really about the timing and the witnesses being in the right place at the right time.
The suspect was charged with attempted arson. Family members say the suspect is a veteran who is suffering from a mental health crisis. A Texas judge has given a pregnant woman whose fetus had a fatal diagnosis permission to get an abortion in an unprecedented challenge to the state's ban that took effect after Roe v. Wade was overturned last year. Kate Cox, a 31-year-old mother of 2 from the Dallas area, is 20 weeks pregnant. The FTC is warning us to be careful of scanning QR codes because hackers may use them to steal your identity. One of the most successful ways of hacking is called social engineering, tricking people into giving our information because we think that we are going to a legitimate website or entering our data into a trustworthy app. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Bailey, Nathan?
Thank you, Michael. Nathan, looking at average gasoline prices, we've got 1 day slightly in the green for little over 68 days by my count, but that's not playing out in the shale patch when it comes to jobs, it seems.
Yeah, it doesn't look that way. Little piece of data that came out from the November payrolls that average hourly earnings for frontline oil and gas workers is up above $44 an hour for the first time. $44.11, up 1.3% from the month before. That is a pretty decent gain. I mean, they got to have hazard pay on the front line of the oil and gas patch, but it really says something about just where this labor market is. And when you think about how, right now NYMEX crude is trading, well below, what were we aiming for? Just $100 a barrel just a few months ago, and now we're just above 70. But still, we're seeing these wage gains in the oil patch. It's crazy.
Big wage gains. Even looking at the chart in that story, you go back to 2015, it looks like we were closer to the $29 an hour range, as you mentioned, now north of 44. So not that bad of a gig.
I guess not. Nice work if you can get it. It is literally a dirty job that someone's got to do on the oil patch.
No, I guess
and
so.
Decent pay if you can get it.
Yeah, no, I mean, I'm waiting to see if you go down there, you let me know how it is, and maybe I'll hop on down to the oil patch. We can get to
even the low of $28 an hour is pretty good for me compared to where I've been before. But really interesting aspect of what we've seen out of the labor data today.
Yeah, no, still seeing that shakeout again. Watching some of the wage growth, watching the wage numbers, a lot being unpacked from the jobs data as well as that University of Michigan sentiment number that we saw. Keeping an eye, though, on markets, we are, again, watching a U.S. equity market that is pretty much flat, S&P down about a point, and we will be continuing to talk about that on Bloomberg Markets. It continues after this. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Final hour of Bloomberg Markets on this Jobs Day Friday. Bailey Lipschultz and Nathan Hager filling in for Matt and Paul, who are both
Have
off.
we figured out where they are, Bailey?
I have to presume that
any idea?
Matt is listening in his car based on car
Right, okay.
Apple Play. I gotta guess that Sweeney's hanging out at the shore.
Not hanging out in the passenger seat.
No,
They're
no.
not
Maybe they're
colluding.
running errands together, you know, up in Scarsdale, I think, is where Matt lives. We do have
That
a
is
packed
his
show.
way. Yeah, absolutely. We're going to be talking much more about this jobs report, this much stronger jobs report than just about everybody expected with our guests in this hour.
Exactly, and Julia Pollack will be one of those. She's the chief economist at ZipRecruiter, and we will have a special drop-by from Janet Lauren, the Bloomberg News higher education reporter. But before that, let's get some news from Charlie Pellet. Charlie.
Hi, thank you very much. Choppy trading session. We are back in the green right now, but the S&P 500 index is trading little changed, actually just swinging back in the red. Has been that kind of a day right now, down by half a point. But the key takeaway there, a little change. We've got the Dow up 9 right now. That is a gain of less than 0.1%. NASDAQ in the red, lower by 2 points, down now by less than 0.1%. The 10-year yield, 4.25% now. We do have the 2-year that is yielding 4.73%. Spot gold is tumbling $27 the ounce to $2,088 right now. That is down 1.5%. West Texas Intermediate crude, though, surging 2.5% at $71.01 a barrel. Jobs Friday, Treasury yields climbing as solid readings on both jobs and consumer sentiment bolsters speculation that bets on Fed rate cuts next year may have gone too far. Jerome Schneider is head of short-term portfolio manager at PIMCO, and on surveillance this morning, he told us you got to keep the jobs report in perspective.
Any one data point, as we witnessed this morning, isn't necessarily as important, and the Federal Reserve will continue to sort of put the emphasis on the longer-term views when they meet next week. So for investors, they should do the same thing. Take a longer-term view, understand that interest rates have greatly recalibrated from where we've come from in 2022.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Honeywell International has struck a roughly $5 billion deal to buy Carrier Global Security business. This, according to sources, as the industrial giant embarks on a spending spree to bolster its portfolio. Honeywell shares, they're down now by 1.6%. Again, recapping, stocks are trading mixed. The S&P and NASDAQ both lower, little change. Perhaps the key takeaway right now, we do have the Dow higher by 6, up less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
And thank you, Charlie Pellet, Bailey Lipschultz, and Nathan Hager hanging out in the Bloomberg Interactive Brokers studio and over in D.C. Nathan, I don't know, do you
Everywhere
have
is a
branding on that?
Bloomberg Interactive Brokers studio. It's always the Bloomberg Interactive Brokers studio, no matter where we are.
We love it, and you can catch us on YouTube.
It's on the wall somewhere.
Watch it, check in on YouTube. If you type in Bloomberg Markets, should pop up, or in your car on Apple CarPlay. It does seem, Nathan, like we're getting a little bit quiet in the equity world. All eyes maybe on that CPI print next week, that FOMC decision.
All eyes maybe on the bond market as well, though. I think we're at the we're at a day high for yields on the 2-year right now, 4 points, up 13 basis points, 4.73%. All the actions in the bond market after what we saw in the jobs report, I think.
Yeah, definitely the driver. But here to talk about stocks, Nathan, I know
got to.
Bonds are where the interest is, but stocks is where the money's made, is what I get told.
Right.
we have Nora Melinda, Bloomberg Equity.
Vicious rumor.
That's what the people say. Well, and Nora gets paid to talk about the stocks, write about the stocks, look at what's moving under the hood. So Nora, looking, as Nathan mentioned, all the actual action happening in the bond market. We've got the Dow up 5 points and the S&P little change. What's going on under the hood?
We've got Lululemon as one of the biggest gainers by percentage in the S&P 500 this morning, or really afternoon now. It's climbing for its highest intraday level on record, up as much as 5.3%. The activewear company reported third quarter results that met a high bar. While the company's fourth quarter revenue guidance failed to meet expectations, analysts still say that results were good overall.
So what's that mean for the athleisure space more broadly? I mean, is there a read-through from what we're seeing in Lululemon, this spike that analysts seem to be driving?
Right. I mean, I think many of these companies are pulling from their Thanksgiving weekend metrics, and specifically in this scenario, Lululemon did say that it was pleased with its Thanksgiving weekend sales, but it's being prudent with planning for the remainder of the quarter as we head into January, and their quarter actually does end in late January. So we are seeing some of these companies, some of these retailers really pointing back to the sales that they were able to receive through the Thanksgiving weekend. We had Black Friday, and consumers are still spending.
Nathan, yeah, you bring up a good point, just looking at some of the read across in the Bloomberg Intelligence North American Specialties Apparel Index. Way too many words there, but at Lululemon, up close to 6%. You're seeing outperformance among Burlington, Adidas, as Matt would probably want to call out, as well as Nike. So it does seem like
Nikkei.
Nikkei.
If you're going to do it, you might as well go all the way.
Are you a Target fan? Do you say Target?
Oh, Target.
Oh, absolutely.
So
Nothing
seeing strength there, Nora,
Right.
looking at another company that seems to be getting a bit of a bid, Paramount Global.
Yes. So Paramount is our biggest gainer by percentage in the S&P 500. Of course, we've been talking about this all day. It's the best performing stock as shares are jumping as much as 14% for the highest intraday level since July. This all comes after a deadline report said that David Ellison and Redbird Capital have expressed interest in the firm.
So what's the interest?
I mean, there's a lot.
What's underneath that report?
Right. I mean, there's a lot of things that are underneath what we know to be the Paramount umbrella. So we don't know exactly what they could necessarily be clamoring for, but it could be a play for Paramount Global's Class A voting shares. That would give Redbird and Skydance control of the conglomerate without having to buy it outright.
Interesting stuff. I'm looking through a Wells Fargo note saying that they think the probability of a deal is decent, given Skydance is a credible buyer, and kind of pointing to the deals and relationships between the company share, Redstone, and kind of everything else happening within the company, within the space.
Yes, and I have one more stock for you that's in the red, right? Okay, Nikola, that's ticker NKLA. It's down as much as 8.3% for its lowest level since June. That's an EV maker, and its slump is coming after it announced that it had raised $100 million in a share sale and sold convertible bonds at an 8.25% coupon. This company is very interesting. Of course, we do know that its founder, Trevor Milton, was convicted back in October of last year of securities fraud and wire fraud and faces as much as 20 years in prison. And the company overall has seen a lot of recent personnel changes as it relates to its senior execs. So this stock is really in focus this morning as we look at the EV maker space and with this slip.
Yeah, and I guess whenever you see a company saying that they need to raise a lot more money in this kind of fashion, it's going to put a lot of pressure on the stock, yeah?
Definitely.
And it's been one of those interesting plays. They went public via SPAC. They were part of this money losing. Yeah, I've spent way too much time writing about these companies that are, as you mentioned, Nathan, in need of a lot of cash to turn around the business. So
looking that way.
Yeah, no, thank you very much. Bloomberg Equities reporter Nora Melinda telling us about everything that's happening on a busy day for jobs. Again, though, the Dow up 3 points. S&P is completely flat with the NASDAQ up a little more than 3 points. Right now, though, talking about that jobs data, we are joined by Julia Pollack, the chief economist at ZipRecruiter, talking about jobs market, talking about this readout. So, Julia, just looking at what we've been seeing from this report, a lot to unpack. What stands out to you?
So many people are saying that this is a very, very strong report and that it suggests that there are no signs of weakness at all. I would beg to differ. This report shows a continued gradual cooling in the labor market. Take off about 36,000 jobs there because of workers who were returning from strike, so that it's not really new wage growth, new job growth. And so the underlying rate of job growth is around 160,000 a a month or so, which is exactly in line with the 2019 average. So the labor market is kind of all the way back to the pre-pandemic normal. Any further cooling, I think, should start making us a little bit nervous about going too far.
It sounds like you might be implying that you do see further cooling in subsequent prints. Is that what you're saying?
Well, online job postings data certainly suggests that that's where we're headed, and that would just be a continuation of the trend that we've seen for 18 months. Ever since the Fed's sort of supersized rate hikes in July, the labor market has been chilly in most industries. The bulk of the job gains recently have been in healthcare and the government, and outside of those sectors, job growth has been very, very slow. It has been flat or declining in professional business services, in manufacturing, in construction, information. Wherever you look, it's been fairly weak and flat. And when you talk to businesses, there's a very clear reason why. They are taking a wait-and-see approach. They're not moving forward with big investments. If you're an apartment building company, you're not building apartments right now because the cost of borrowing is too high and valuations are too low. You are instead looking for distressed properties to snap up, but you're not building, you're not growing, you're not hiring, and you're waiting to see what happens next year.
And Julie, how do we see that play out over the course of 2024? Because we've had a few guests on the show really talking down any expectations for a big change to the up or downside in 24, with more of that probably playing out on a more macro scale in 2025.
I think it could already start happening in 2024. I mean, inflation is coming down meaningfully, quite consistently. We're going to get a little bit of good luck coming our way with the decline in oil prices recently. Wage growth on a 3-month annualized basis is just 3.3%. That is fully consistent with the Fed's 2% inflation target. So I think we are closer to where we need to be on inflation than that year-over-year number suggests. And you know, if that continues to go in the right direction and the labor market continues to cool over the next 3 months or so, I think you could start to see movement on rates.
What kind of movement? Are you thinking that that it could be as aggressive as had been priced in before we got this print this morning?
I do think so. Yes, I mean, I think this print, it's a funny jobs report, right? Because it comes right after a month in which 96,000 U.S. workers were absent on strike. And so the weakness in the last report was partly illusory, and the strength in this report is similarly a sort of a mirage. The underlying trend is just, a line that goes down and to the right very, very steadily. I would argue that we have reached a place that is sustainable, that is healthy in terms of overall macro numbers, although no two industries are alike, and there are some very strong industries like healthcare and other very, very weak, stagnant industries. But in the aggregate, the labor market is now in a fairly good, healthy place, but too much more cooling, and that won't be the case anymore. Usually, for a long time, economists have said things like, hey, all we need to do is add about 75 to 100,000 jobs each month to keep pace with the population's growth. Well, that's not true anymore. If you look at how quickly the labor force has grown over the past 12 months, it's added 311,000 people, on average each month. That is tremendously rapid labor force growth. Part of it is women coming into the labor market in much higher numbers than was anticipated. Perhaps that's remote work and increased flexibility drawing them in. And some of it, a lot of it, is due to immigration as well. The administration has streamlined various immigration processes and tried to make up for those backlogs that accumulated during the pandemic.
And how do you see, when you look at forward-looking expectations, how do you see kind of this AI trend playing out and impacting the job market and the ability for people to either stay employed or gain new skills that are transferable to different areas of different industries or different fields?
Very, very interesting question. And we're learning more and more every day as companies release new research and as academics study what's going on. One effect is perhaps going to be that the constraint in the labor market on the supply of talent may be looser as a result of AI. We've seen that generative AI tools make the least skilled, least experienced employees experience the largest increases in productivity. So ChatGPT could open up employment opportunities for people who might not have had opportunities otherwise. It does appear, though, that it is also eating up some white-collar jobs. A new paper just out shows that after ChatGPT was introduced, freelancer employment in various online platforms fell. So if you were going to hire a freelancer before to, write a speech for your daughter's wedding or whatever, you might now instead just have ChatGPT do it. So it's not clear what the aggregate effect will be. It'll clearly create a lot of jobs for people with AI skills, as it has already started doing. It's creating a lot of AI content writer jobs, but also perhaps taking some other content writer jobs.
Is it possible to extrapolate what the impact of artificial intelligence could be on wage growth?
That's a very good question. So typically the sort of standard prediction about technology's effect on the labor force is that it'll make the people who adopt the technology and use it best, obscenely productive and wealthy, while leaving the rest in the dust. But that's not always what happens. And the early studies that show that giving customer support staff access to generative AI tools had no productivity effect on the best workers who didn't need a script. They didn't need help. They knew exactly what to do, but boosted the productivity of the least skilled employees, ones with language barriers, by 30%. That suggests that perhaps we could actually see wage growth for those workers at the bottom.
Interesting. Julia, what kind of trends are you guys seeing at ZipRecruiter? You're on the front lines with recruiting, hiring, and the like.
Yeah, we've seen some very interesting trends. The acute labor shortages that employers suffered during the pandemic caused them to make huge investments and changes in the way that they recruit and retain and manage talent. And those investments are going to bear fruit for years and years to come. For example, we've seen that the time it takes for employers to respond to candidates, we've seen that time come down. Many companies now respond to every job applicant in the queue by 5 p.m. each workday, or within 24 hours, within 48 hours. No more, waiting for a week or 2 or 3 to hear back from an employer. If they want you, likely you'll hear right away. So yeah, lots of exciting changes that I think will be good for job seekers and employers. We see that remote work is here to stay, even though there's tremendous variation across companies.
No, great. Thank you so much. That is Julia Pollack, Chief Economist at ZipRecruiter. We have to leave that conversation there, talking about the labor market on Jobs Day. This is Bloomberg. Now let's get some company news with Steve Rappaport. Steve.
Bailey, the Federal Trade Commission once again wants to hear from Chevron and Hess regarding their plan to join forces. The latest on that from Bloomberg's Erica Herskowitz.
Steve, the regulators want additional information and documents from the companies about their $53 billion deal. Hess and Chevron say they expect to promptly respond to the request as they seek to complete what would be the second biggest merger of oil giants this year. The FTC is also investigating Exxon's bid to acquire Pioneer Natural Resources for $59.5 billion in an all-stock deal. Steve?
Thanks, Erica. Shares of DraftKings are up despite word of a lawsuit against the sportsbook. Details from Bloomberg's Jeff Bellinger.
Steve, a class action suit accuses DraftKings of unfair and deceptive advertising. The Public Health Advocacy Institute says the terms to qualify for a $1,000 bonus bet are too onerous. The lawsuit says the promotion is designed to make new customers believe they'll receive a $1,000 bonus after depositing money into their account. But to get the grant, a customer has to deposit $5,000 and wager $25,000 within 90 days. Steve?
Thanks, Jeff. Who doesn't love robocalls? The U.S. consumers received just over 4.5 billion calls last month. That's according to UMail Robocall Index. Bailey, if you're curious, that number translates to 1,738 calls per second.
Oh my gosh. Can I have implement AI to have conversations with those robocalls?
That would actually be a great counter. Those are the company news stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are now looking at an update, little changed on the S&P 500 index, up by 1 point. The Dow higher by 12 right now. That is a gain of less than 0.1%. Nasdaq Composite Index up by 8 points. That's a gain also of less than 0.1%. We do have the 10-year now yielding 4.25%, with a 2-year 4.72%. Gold at $19.97 the ounce, just dipping below $2,000. West Texas Intermediate crude holding just above $70 a barrel. WTI up 2.2% right now. It's $70.87. So it is an update for now. Has been a choppy trading session. After earnings, shares of Broadcom are trading lower. We got Broadcom down by about 0.1%. Lululemon Athletica shares, they are higher by 5.7%. And also after earnings, RH Inc., the old Restoration Hardware, it is plunging 14.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
And thank you, Charlie Pellet, Bailey Lipschultz, and Nathan Hager here in the Bloomberg Interactive Brokers Studio as the Bloomberg Markets rolls on. We got about another 37 minutes, Nathan, as we've been
until
talking.
we hand off to the next one. That's right.
Until and then the cycle continues. A lot of optimism still seemingly under the surface, though, for rate cuts. But when we're looking at the market's reaction on a cross-asset basis, maybe not so much.
Yeah, we've, as Charlie was mentioning, we've seen stocks sort of swinging between gains and losses, but the spike in yields that we've seen off the back of the payrolls report has been pretty stunning. I mean, just about every data point that comes out from day in to day out, it seems like it drives even more volatility in the bond market. So definitely worth continuing to watch as we get closer to that next rate decision from the Fed, coming up next week.
Yeah, Wednesday.
Yeah.
Be interesting. We do get some. We get PPI data the day, CPI 2 days before, PPI day before, some jobless claims. So we will definitely have quite a bit in terms of economic data, economic reaction. Heading into the holiday season and the hopeful so-called Santa Claus rally.
See if the Santa Claus rally continues. Yeah. But we're going to be handing off to politics in just a little bit here. And, one of the big political stories of the last few days in the aftermath and the ongoing turmoil that we're seeing in the Middle East is this reaction that we've seen on college campuses, protests on both sides, pro-Palestinian, pro-Israeli, and the rise of anti-Semitic incidents at college campuses. And we had that congressional testimony just a few days ago from the presidents of Harvard, MIT, the University of Pennsylvania, where they were asked, pretty directly to say whether calling for the genocide of Jews on campus violates school policy. And we saw these narrow legal answers that were given by those university presidents that really has sparked this ongoing backlash, not just from students, but from alumni, major donors. We saw a major rabbi who worked at Harvard University resigning in protest. This controversy just is not going away, and it could really have an impact on university endowments.
Yeah, it's something that we've been tracking, been paying attention to. As you mentioned, you saw the alumni at Harvard University, among others, really kind of pushing back on how the board and how leadership at the universities are handling this. And it does seem like it's only gotten worse in the wake of Harvard presidents Claudine Gay's that congressional testimony on December 5th, and kind of the questions around how universities and a lot of the biggest and most well-known Ivy League universities, how they're handling it and reacting to it.
Yeah, absolutely. I mean, we've seen the university presidents, you mentioned Claudine Gay, and also Liz McGill from the University of Pennsylvania sort of issuing statements. We had a video statement, in fact, from the Penn president, trying to clarify those comments and sort of walk them back a little bit. But this backlash isn't going away. So with that in mind, we want to bring in our Bloomberg News higher education reporter, Janet Lauren, who has been following this very closely, breaking a lot of news in the aftermath of these ongoing protests and this backlash that we're seeing for these university presidents. Janet is with us now. What's the latest? Are these university presidents living on borrowed time?
Well, it's not entirely clear. There's obviously a lot of discussions going on right now. Their boards, they're trying to figure out what to do next. The hearing was somewhat of a disaster. I think that's sort of universally understood. Keep in mind that these schools are also under investigation in several ways from the federal government. There are the Education Department is looking into their Title VI complaints, which is civil rights issues. So there's that investigation. We also heard yesterday that the House Education Committee is also investigating. So one thing you do have to remember about schools, even though they are private schools, they get a lot of government money. You know, you're looking at student loans, you're looking at grants like Pell Grants, you're looking at tax deductions from donors, but also they've taken a tremendous amount of federal money for their scientific research. So if that's threatened, that could be quite a big problem for them. In addition to all we've been hearing about with donors pulling back, you know, we had a story earlier this week that everyone, small donors, large donors, volunteers, you know, so many people are quite upset about this, and they're trying to step back from places like Harvard and Penn, where they've had relationships for not just a few years, but we're talking decades, you know, 50 years. We had a story about a Penn donor who is clawing back, using an interesting strategy to claw back a donation of $100 million based on a morality clause that he had included. And, you know, in the letter to his staff, he said, I never thought I would ever have to use this, but was so horrified by how the presidents responded in the hearing that, you know, people are still quite stunned. You know, if this was a public company and you had a CEO testifying, you know, you would have a real immediate reaction in a decline in stock prices. But as these are, you know, private universities, you don't have that same kind of metric.
And Janet, what happens next in terms of how the universities handle this? What actually happens with some of the leadership members?
Well, these are discussions that are happening now about the presidents, about the board members. You know, there's been a push for the board chair at Penn, Scott Bach, to step down, in addition to the president. So these are discussions that are, you know, that are happening now. The schools are looking to also limit liability. But I think the overall issue that people still have is, why is this pervasive anti-Semitic why is there a pervasive anti-Semitic nature on these campuses? Why is this still allowed? Why are there still people allowed to scream the word Intifada and have signs up? And it's an environment where Jewish students find threatening. And I think that the response from the hearing is that's still not really being addressed.
And it points to the difficulty as well when we see, you know, a top rabbi in the advisory board of Harvard University feeling that he has to resign after the comments that we heard from Claudine Gay, the Harvard president. I guess it speaks to the difficulty that comes to, you know, trying to change minds on university campuses when, you know, a lot of students have, you know, pretty strong views on these issues. It's such a complicated issue with Middle East relations.
Well, but it's not just the students, it's also the faculty.
Yeah, right.
And I think that's the concern. It's the students and the faculty in this pervasive atmosphere continues. And there is sort of a double standard that people have mentioned if you were hearing these types of words for other ethnic groups or you know, trans community, would not be tolerated. And you know, and the criticism is coming from all camps. You know, you heard the Democratic two congressmen who represent Massachusetts, both Harvard alum, both Democrats, both military veterans, saying they were extremely disappointed in their alma mater. So it's really quite a widespread dissatisfaction.
And Janet, in terms of universities, obviously we're talking Penn, Harvard, MIT. How widespread geographically in terms of universities and colleges are these issues and these conversations?
Well, I think you're hearing them the loudest, certainly at these campuses on the East Coast, certainly Stanford as well. You're not hearing as much at other places, and it's a good question. Perhaps you've heard the issues at the City University of New York system, but it's perhaps if you're a smaller liberal arts college, not near a big city, it just may not be as pervasive because your critical population is much smaller. But several people have made the point, and the rabbi did as well. Most kids on college campuses today do not feel this intensely. They're just there to get an education. And when you see the videos of the classes being disrupted with bullhorns and the uneasiness of the students, they're paying $80,000, or they're borrowing money, or the school is giving financial aid. They want to do their work. They want to finish their finals. And there's tremendous amount of disruption. And the lawsuit that was filed by some Penn students, this is the amount of tuition that families are paying. And they're not there to protest. They're there to get an education and learn.
We've got to leave it there. Janet, Lauren, thank you so much. Bloomberg News Higher Education Report talking about all the backlash around anti-Semitism on college campuses. And now let's get some world and national news with Nancy Lyons in the 99.1 studio in Washington, D.C. Nancy.
Thanks, Bailey. The UN is addressing the war in Gaza, with Riyad Mansour representing the state of Palestine, urging support for a humanitarian ceasefire.
Show them help is on the way. We call on you in the name of humanity, in the name of justice, in the name of peace, to vote for a ceasefire by supporting the resolution presented.
Israel says to approve a ceasefire is to give Hamas new life. The U.S. has said it does not support any further action by the UN Security Council at this time. The vote has been delayed, with Arab countries hoping they can convince the U.S. to abstain. President Biden's son Hunter is facing 9 new federal tax charges in Los Angeles just months after his plea deal on misdemeanor tax counts in Delaware fell apart. Bloomberg government Zach Cohen says these charges are more serious.
These felony charges actually carry a prison sentence, and so he'll go to trial sometime next year, potentially right around the same time that former President Donald Trump also faces indictments in multiple jurisdictions.
Bloomberg government Zach Cohen. Officials in Atlanta credit Good Samaritans with helping save Martin Luther King Jr.'s birth home from an apparent arson attempt last night. Police say 2 tourists were walking by King's birth home near the King Center, intervened when they saw a woman pouring gasoline on the windows and bushes of the house.
If the witnesses hadn't been here and interrupted what she was doing, I mean, it could have been a matter of seconds before the house was engulfed in flames. It was really about the timing and the witnesses being in the right place at the right time.
The woman was arrested on 2 charges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ back in the green. Has been a choppy Friday here. Jobs Friday. S&P now higher by 5, up by about 0.1%. Dow Jones Industrial Average up 46, up by 0.1% as well. And the NASDAQ Composite Index also up by 0.1%. We've got the 10-year yielding 4.23%. The 2-year right now, 4.72%. Spot gold down $30 the ounce, now back below $2,000 the ounce. Gold at $19.97. It is down by 1.5%. West Texas Intermediate crude up 1.9%, $70.64 right now on WTI. Treasury yields surged as solid readings on both jobs and consumer sentiment bolstered speculation that bets on Fed rate cuts next year may have gone too far. Reaction to the jobs data from Julia Pollack, chief economist at job search firm ZipRecruiter, who was interviewed moments ago right here on Bloomberg Markets.
Ever since the Fed's sort of supersized rate hikes in July, the labor market has been chilly in most industries. The bulk of the job gains recently have been in healthcare and the government, and outside of those sectors, job growth has been very, very slow. It has been flat or declining.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Microsoft is converting a group of subcontracted temps into unionized employees, bucking an industry trend and expanding organized labor's new foothold at the software giant. Microsoft shares, they're up today by 0.5%. Recapping little change for the U.S. stock market, S&P up 5 now, up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And thank you, Charlie Pellet, Bailey Lipschultz, and Nathan Hager here on Bloomberg Markets, bringing you into the end of the show, talking jobs, talking where we're at. Markets, at least from equities perspective, now back slightly to the green. Nathan?
Yeah, sticking with the job theme, really interesting to hear Charlie talking about the unionization trend that, it doesn't seem to be slowing job growth, at least from the latest numbers that we saw from the Labor Department with November payrolls coming in, and the the striking workers from the United Auto Workers coming back and helping to bolster those numbers as well.
Yeah, a lot to unpack. Average hourly earnings, an area that I'm spending too much time focusing on, increasing more than I think people were expecting. But to dig into the latest in terms of the jobs report, we are now joined via Zoom by Haley Dam, the Director of Workforce Planning at Adecco. Haley, what's your takeaway? Headline numbers seem really strong, but as Nathan mentioned, the return from those striking auto workers in Hollywood as well, helping kind of bolster some of those numbers.
Yeah, thank you for having me, first of all. But overall, for us, really good news on the jobs report today. I mean, we ultimately continue to see stability and resilience in those numbers, which is aligned with what we expected and also, furthermore, what we are seeing in the market.
Are we at full employment?
Not quite. We're getting there, I think. I mean, I'm not an economist, but what I can tell you is it's a very tight market. It's very talent driven. And we're having to be very, very careful about selection and making sure that employability of those entry-level skill sets is top of mind. When you get to a tight place in the labor market, it's not exactly always a one-for-one. There might be skill gaps in places where you need to upskill workers to make sure that we can meet that demand.
And we saw the return, again, of those striking workers. What should we be looking for in December, in the year ahead, as it relates to the jobs market and how that can continue to prop up this economy?
Seasonality has a lot to do with the way that the wage is impacted. So for us, we've just been coming out of a large seasonal hiring ramp.
Since the Fed's sort of supersized rate hikes in July, the labor market has been chilly in most industries. The bulk of the job gains recently have been.
Many of those assignments are moving to be longer than they would have been typically in years past.
Again, some technical difficulties there. I think we ironed them out to try to get some of your thoughts here, Haley. Wanted to talk to you a little bit about, how talent plays out in this labor market and your role as, Director of Workforce Planning. What's some of your advice for people who might be thinking about, making a lateral move in this labor market? What are some of your thoughts there?
Sure. So I think the buzzword that we've really been hearing recently, or throughout the pandemic and towards the end of that, is really about flexibility and movement, and wage was a huge piece of that. It's since turned a little bit more to stability. I think the employer needs to focus on how they attract the best talent and retain the best talent. And the job seeker is really looking for stability in employment and how they can look to grow their career or have the ability to have skills advancement in those spaces.
And with that in mind, are you seeing a trend of workers staying put and working for individual companies, or staying within kind of a singular field as opposed to bouncing around like we saw was very much a trend during the pandemic?
We certainly are. There's a lot less movement in the market these days, which is very indicative of, potentially an uncertain economic state. But there has been a lot of volatility in the workforce in recent months, and that's really starting to level out. And the resiliency of the workforce and employers' unique ability to engage their workforce in a different way has been really interesting to see. And we're very excited about engaging with our customer base on that moving forward into 2024.
Does that mean it's going to be difficult for people to find new jobs with higher wages? Because we're looking at some of this data that came out just this morning, and we're still seeing a little bit of sign of wage pressures here. But do you expect that to continue into 2024?
I think wage pressure has certainly slowed. Again, I really feel that the employee is looking for different sorts of benefits. Are they working for a stable employer? Is it a good work environment? Do we have other benefits in place, like accessibility to good benefits and engagement in the workplace, that are a little bit more important to folks than it would have been, let's call it 4 to 6 months ago?
And what are some of those benefits and perks? Because it feels like every time I read some stories on the terminal or online about companies cutting back some of the spendings and things they offered over the last year and a half to attract talent.
Honestly, when we say cutting back, I do think there's been a shift from that initial sign-on bonus or stay bonus mentality to really what are we doing to engage the employee in the workplace? And that can be anything from like, what does the lunchroom offer in a manufacturing environment, to what are those long-term benefits that they have available to them, maybe in a more professional environment.
Are you looking at certain sectors that are providing better benefits to their employees maybe than some others?
Well, for me personally, my focus really is in the entry-level skill set. So that's more of my area of expertise. And what we're seeing is the ability to grow their career and have a true career path that allows them to stay with one employer versus having to move or feeling the necessity to move from one to another.
And with that stability in mind, though, where are the jobs? Where are people jumping to when you look into 2024? What are the trends going to be like?
That's an interesting question. And again, I'm not an economist, but what we are seeing is that sustained growth in those entry-level skill sets that I'm familiar with around, manufacturing and clerical light industrial space. There's a lot of wonderful opportunities out there, and we're really working with our customer base to go to market in the right way, improve the employee value proposition, and attract the right talent or the best talent that they have in the market.
So just quickly, Haley, are you looking at companies having a better time holding on to their employees and sort of pulling back from that trend that we saw just after the pandemic, that employees were feeling a lot more empowered to look for better opportunities in some other company?
In some ways, yes. Employers really have to do the work. The tighter the market gets, we really, really have to hone in on that retention piece. So we particularly work with our customer base on how do we do that and how do we highlight those types of long-term benefits to a job seeker, which not only helps us attract the right talent, but then retain the right talent. But it's a labor of love, certainly, and it does take a lot of work and attention. But companies are really rising to the occasion, and it's nice to see.
Awesome. We have to leave it there, running out of time. Thank you so much. That is Haley Dam, Director of Workforce Planning at Adecco, talking about everything going on in the jobs market. Nathan, interesting to see that employees want perks and they want to stay at a place that has staying power.
Yeah, I don't think that really changes no matter what's happening in the economy. Employees want decent wages and they want benefits. Absolutely.
Totally agree. More markets will continue. This is Bloomberg. And now let's get some company news from Steve Rappaport. Steve.
Bailey, Microsoft's partnership with OpenAI could be coming in for more scrutiny overseas. Let's get the details from Bloomberg's Joe Easton in London.
There's been a dramatic few weeks for that company, hasn't it, with that big change over at OpenAI. But Microsoft, once again, is in the crosshairs of the UK competition regulator, which is investigating its $13 billion investment in OpenAI. They want to look at who is in control of those two companies. And it follows the UK CMO almost blocking their purchase of the video game maker Activision Blizzard. So it's not their first fight with the UK regulator.
Bloomberg's Joe Easton reporting. Disney is exploring the launch of shopping and gaming experiences for Disney Plus customers. That's according to Variety, which also reports advertisers could get involved. Competition for streaming ad dollars is growing. Amazon is expected to roll out an ad-supported tier for Prime Video subscribers next year. Grand Theft Auto fans will have to wait until 2025 to play the next installment of the franchise, but they logged in record numbers for a taste.
Look who's back. The only way we're gonna get through this is by sticking together, being a team.
YouTube says the first trailer for Grand Theft Auto 6 generated 93 million views in just 24 hours. Rockstar Games released the trailer a day early after it was leaked online. YouTube says the trailer has now generated 250 million views since it was posted on Monday. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Bailey Lipschultz and Nathan Hager sitting in for Matt and Paul on this job.
Neither nor. We are neither Matt nor Paul.
I wish, if only one day, maybe.
That's right. You can aspire to be either Matt Miller or Paul Sweeney. Who would you choose? Let's not go there.
I take the fit. Anyway, let's get some world and national news with Nancy Lyons in 99.1 studio in Washington, D.C. Nancy.
Thanks, Bailey. The state of Palestine is urging the UN to support a resolution calling for a humanitarian ceasefire in Gaza. But Israel's UN ambassador Gilad Erdan says they're playing into Hamas's hands by supporting the proposed resolution.
Hamas wants to maximize civilian casualties, to co-opt the UN to pressure Israel to cease its fire and allow Hamas to survive and continue its reign of terror.
The U.S. has argued against a ceasefire as well, saying it would only benefit Hamas. A vote on the resolution has been delayed. Hunter Biden is facing new federal charges. A grand jury has indicted the president's son in his home state of California, accusing him of failing to pay at least $1.4 million in federal taxes while allegedly taking false deductions. Prosecutors claim that Hunter instead spent the money on drugs, escorts, luxury hotels, exotic cars, and clothing. Nima Rahmani is a former federal prosecutor.
This isn't a case that you can defend on the merits. Maybe you can hope for some sort of jury nullification, but I mean, there's no question, at least according to the indictment, that Hunter Biden didn't pay taxes, that he had the ability to do so, and that he was writing off all sorts of expenses that weren't really business expenses.
Normani says Biden may seek a plea deal to avoid the 17 years in prison he could receive if convicted. Hunter Biden's attorney, Abby Lowell, says the special counsel on the case is bowing to Republican pressure. The International Olympic Committee will allow some Russian and Belarusian athletes to compete in next year's Olympics in Paris. Athletes who qualify for their sport will participate as neutrals without any flags. It'll be up to each Olympic sports governing body to assess and enforce neutral status for individual athletes who have not actively supported the war and are not contracted to military or state security agencies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Bailey and Nathan.
Thank you, Nancy. Nathan, I don't know about you. Do you use Amazon to shop a lot?
I do. These days, you kind of have to. It's almost unavoidable using Amazon.
Especially if you're a Prime member and you get the quick turnaround shipping. It makes life easier, especially in the holiday season.
Yeah.
Seeing one of the more read stories on the terminal, though, Amazon says thieves swiped millions by faking product refunds. Apparently, shoppers would buy goods and then seek refunds without actually returning the products.
I've never done that. I'm never going to cop to something like that. But, yeah, apparently they've named, nearly 30 people in this organization called REC, kind of aptly named. Yeah. That's accused of doing this scam, buying stuff, seeking refunds, not actually returning the goods. Gaming consoles, smartphones, 24-karat gold coins. If this turns out to be something that's actually done, come on. This is just not right. Another really interesting aspect to this story, Bailey, Amazon spends $1.2 billion and employs 15,000 people to fight theft, fraud, and abuse on Amazon. I mean, even for a company of Amazon's size, that is a pretty significant chunk of change.
That's a big chunk of change. You mentioned the products.
Yeah.
Personally, I don't know if you buy a 24-karat gold coin and you say you're going to return it. Like, how does that process work? And Amazon just credits you for the massive amount of money you spent?
That just doesn't seem like something that you would be like, oh, yeah, I'll refund you on that. Sure, why not?
Weird stuff, weird stories.
Really
anyway,
story.
a fun one on a Jobs Friday. Again, S&P up 6 points, Dow up 55 on what's been a busy day. Bailey Lipschultz and Nathan Hager filling in on Bloomberg Markets. That's all we've got for now. Sound On with Joe Matthews starts right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
There's only about a week left to get something done this year on Capitol Hill, and it's not looking good. Welcome to the fastest show in politics as the clock ticks now on a pile of issues that need to be resolved by the end of the year. Never mind funding the government next year. We're going to talk it out with Congressman Don Beyer, the Democrat from Virginia. With us in just a moment, we'll also weigh in on today's jobs data with details ahead from Bloomberg's Michael McKee. Democrats in the Senate are calling for new humanitarian accountability, strings attached to funding for Israel. And Hunter Biden is hit with new tax charges. We'll talk out all these stories with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. Let's get up to date on trading right now with Charlie Pellet in New York. Hey, Charlie.
Matthew, and happy Friday. Jobs Friday. Treasury yields surge. Solid readings on both jobs and consumer sentiment this morning are bolstering speculation that bets on Fed rate cuts next year may have gone too far. Stocks are advancing. S&P right now up by 6 points. It has been a choppy Friday, up by 0.1%. The Dow up 55 now, also up by about 0.1%. The Nasdaq Composite Index is up 0.2%. The Nasdaq 100 Index, full of big tech names, up by about 0.2%. 10-year at 4.23%, with a 2-year 4.71%. Gold down $31 the ounce, trading back below $2,000, lower today by 1.6%. And West Texas Intermediate crude is up 2%, $70.79 a barrel. So Jobs Friday reaction to this morning's number from Michael Darda, chief economist and market strategist at Roth MKM.
This is a good report. Almost 200K with the downward revisions, we're at or just below the consensus expectation. But we were talking about the unemployment rate moving up to the cusp of a recession signal. Now we've pulled back to 3.7 on the unemployment rate. So this is a report the Fed is going to look at and not really feel compelled that they need to embrace these early rate cuts next year that the market has priced in.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. And we got a whole lot more on the jobs report coming up on Sound On. Starbucks says it has reached out to the union, representing hundreds of its stores, a potential step toward ending an impasse that has frayed the coffee giant's relationship with some of its frontline employees. Starbucks shares up now by 0.2%. Again, recapping, stocks back in the green for now, with the S&P up by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome to the threshold of the weekend and the Friday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where all the talk is about jobs. It is Jobs Day, and frankly, there's nothing else going on around here. We spent the better part of the week talking about a potential deal on the border, funding for Israel, Ukraine, maybe a breakthrough in the Senate. The Senate and the House are out today. We only have a couple legislative days left here. They've got through the end of next week, essentially, to get something done, and we're going to talk to Congressman Don Beyer about that in just a moment. The headline, though, on jobs is stronger than expected pretty much across the board as we connect with our friend Michael McKee in New York, Bloomberg economics editor. 199,000 jobs. Michael, it's great to see you. I heard you live at 8:30, and I know you've been talking about this ever since. I can tick through the data. If you're listening to Bloomberg, if you have a terminal, you don't need me to tell you. Monthly wage growth rising more than expected. Workforce participation up. It's hard to find bad news in here, I guess, depending on how you look at things. Michael McKee, what does it mean for the Fed next week?
Well, it's good news for the Fed. Basically, it tells them that we are still seeing strength in the economy. It has slowed. Hiring is lower than it was, but we're seeing wage gains, and the rate of wage gains is slowing, so less inflation pressure. But overall, it fits the Goldilocks soft landing scenario quite well. I joked earlier today that I wish I had been at the Council of Economic Advisors this morning when they opened the champagne bottles, because this is certainly good news for the Biden administration.
Sure is. I mean, look, I guess it's good to see wage growth in an era of inflation, but doesn't this become the definition of inflationary at some point, Michael, or am I reading it wrong?
Well, it would if it were continuing to go up, but what we're seeing is wage growth coming down. The Fed thinks that average hourly earnings of between 3 and 3.5% are what's sustainable with 2% inflation. It still leaves you a little ahead of inflation. And so we're down to 4% now. So we're getting into that range. And as long as it continues in that direction, the Fed will feel justified. Then the question becomes, if we get down to the 3.5% range and inflation continues to fall, when do they start cutting interest rates? That'll be a key question that'll be asked of Jay Powell next week.
So this is sweet music for the White House. Obviously, Michael, it would be an orchestra, though, if we actually did see a soft landing at some point in what's going to be a re-election year potentially for Joe Biden, certainly a campaign year. But Bloomberg Economics is telling us that a recession probably already started in October. How do we rationalize that call?
Well, nobody's been able to predict recessions with any accuracy. We find out later that we were in a recession because the numbers get revised and they get revised lower to show that things were actually contracting. Right now, it doesn't seem like that's the case, that we're seeing still growth in just about every category. And certainly the hiring levels and the unemployment rate of 3.7% suggests that we're not in recession. It could always be changed, and we could find out in the new year that we are. But at this point, it looks like a soft landing. The issue is, how do you define it in terms of time? You could come out if you were Jay Powell or Joe Biden right now and say, well, we had a soft landing. Do you wait until you get to 2% inflation sometime next year? Because the economy is always evolving, so you're always at risk of, well, we had it, and then it left.
Good to see you, Michael. Have a great weekend. Thanks for the good news. Michael McKee, Bloomberg Economics editor, with us from World Headquarters in New York as we turn to the congressman from Virginia. Don Beyer, the Democrat from the Commonwealth, is with us. At least you're still here, Congressman, by the nature of your district, of course. I know a lot of lawmakers have headed home for the weekend, and I'd love to start with you. Welcome back on the news on jobs here. Aren't you itching to see that mission accomplished banner go up here, see Joe Biden take victory for beating inflation, for accomplishing the soft landing? Is this it right now?
Well, Jay, I wish it were that simple, but there's a lot of really good news. I loved your interview you just had. You know, the fact that it's the 14 million new jobs in the Biden administration. This is the 22nd straight month we've been below 4% unemployment rate. That's never happened in our lives. And now we see inflation's down to about a third of what it was a year ago. I was fascinated to see the Michigan Consumer Sentiment Index this morning that Americans are beginning to feel and project much lower interest expectations, including an 8-year range of 2.8%. So we're moving in the right direction. The problem we have, and I think most people comment on this, is that we have not gotten used to the 9-10% higher prices that hit us last year when inflation was so high. So food still costs more than we think it should. Gasoline's getting in the right place, which is great. But you know, unless we expect massive deflation, which would be terrible for the economy, we're not going to go back to the prices the way they were. And that's going to make us pretty unhappy for the middle run.
And that's why Joe Biden looks at that historically low approval rating. He's in the upper 30s, low 40s, depending on the poll that you're watching, Congressman. Can that change in the next year? I
think so. And, you know, if the Fed starts to move those rates down, that will be a wonderful thing. I mean, the markets are going to love it. And I think the people will feel much better about it. You know, right now, it's pretty hard to buy a new home when, you know, 30-year interest rates are 6, 7, 8%. So I'm hoping that Jay Powell and his team look at these numbers and say, okay, we've done enough. Let's start to loosen this economy a little bit more.
Well, that would be a good thing. There's a thought, though, that what's happening on Capitol Hill is an economic risk in itself, Congressman, and I wonder your thoughts on this. As a member of the minority party, you're a bystander in some cases when it comes to the dysfunction that we've seen. But is it likely we're going to go into this recess next week without anything being accomplished on funding for Israel, for Ukraine on the border, or for overall government funding?
Yeah, Joe, there's three big things hanging over us in the next 6-7 days. One are the FISA 702 law, which is basically came after 9/11, which gives our intelligence committee the ability to listen in on foreign conversations. That expires 12/31. And we really dare not have it be out of not the law for even a day. So we've got to get that done. The FAA is about to expire again, so we need the Federal Aviation Administration to be reauthorized this week. But the big thing is Ukraine's out of money and they're out of weapons. They desperately need the new investment from the USA. And that's, $60 billion is what the president's asked for. Israel is really looking forward to its investment, and the people in Palestine need that humanitarian assistance. All three of them right now are hinging on whether or not we can get agreement on border control. Basically, the Senate Republicans have said without significant change in the border laws, it's just toughening up the border, they won't move forward. They've turned down all the Biden requests for more money for border guards, for judges to process asylum applications. I'm hoping that Senator Chris Murphy, a Democrat from Connecticut, who's leading the charge on our side, will be able to come up with a good compromise, and we can get that done this coming week.
Well, now that would be a piece of news.
It's a really dangerous thing in terms of handing Ukraine back to Putin.
I get it. If you accomplish that next week, though, this would be a screamer of a headline, as we say in the business. It's been 20, 30 years in the making to actually get Republicans and Democrats together here and pass legislation, not just an agreement, but make it law. Congressman, there's a report from Reuters today. The Biden administration is considering supporting new restrictions on who can seek asylum, defining asylum more narrowly, as well as an expanded deportation process, maybe open to designating additional safe third countries. Is that what you're hearing from the White House? Would you support those measures?
Yes, I would. And I think, Joe, we're looking at 11, 12,000 people a day crossing the border. And these aren't folks swimming across the Rio Grande. They're walking across the bridge from Juarez to El Paso and turning themselves in and claiming asylum. And we have, a very generous asylum system. Because we can't process them, it's 2, 3, 4 years to get a hearing. We release them into the countryside, the so-called, humanitarian parole. And then we end up with ever more people without papers in the U.S. who can't work in the normal economy. We've got to do something. Even when democratic cities like New York and Chicago are pushing back hard, we know that there has to be a bipartisan solution.
That's an important statement for a Democrat to say. Do your colleagues you're talking with, when reporters like me are not around, feel the same way? Or is this going to be something that Democrats need to do some soul searching on before voting next week, if it really came to that?
Yes, some soul searching. And certainly not everyone on the Democratic side agrees with me. We have there's a natural conflict between our compassion, our desire to help every human being and take care of people who are fleeing murder and sexual assault and deep poverty. At the same time, recognizing, as Barack Obama said, that we're not a country if we don't have a border. And I think there are ways we can work together. One of the pushbacks from my Republican pals is they don't want to give citizenship access to the dreamers or to the people that have been here on temporary protective status, sometimes for decades. And one of the things we want to see as Democrats, in fact, senior White House official said, I'll trade all kinds of border security for the right of our dreamers to have a path to citizenship.
Well, all right, so let's stop right there, because I haven't heard that word from a Democrat on this program, Congressman, since this debate began about border security, the throes of debate that we're in right now. The idea is, instead of asking for help with dreamers, Democrats will trade border reform for Ukraine funding. What about dreamers? My goodness, they're old enough to have kids themselves now.
Oh, I think a lot of them now. There are many in my district in Northern Virginia, and you know they're the heart of our economy. They're all valedictorians of their high school classes. They're doing really well in our Virginia colleges and universities. But you're right. Some of them are getting to be into their 30s with families of their own, and still don't feel like they can be American citizens. No green cards. It's really unfair. But
they're not going to be part of this deal, though, are they?
Well, I wish they were. I'm not a senator, so I'm not part of those conversations. But I'm certainly hoping that people like Chris Murphy are asking that as our part of the deal.
Mm-hmm. We're spending time with Congressman Don Beyer on Bloomberg Sound On. Congressman, I'd love to ask you about the rub when it comes to Israel as well, because a number of progressive Democrats, and in this case, many senators, are asking for humanitarian strings attached to the money, if you will. It's not just Israel, technically it's Ukraine as well. But Chris Van Hollen, about a dozen progressive Democratic senators have put up this amendment to the supplemental that would require exported offensive weapons be used, quote, in accordance with U.S. law, international humanitarian law, and the law of armed conflict. Would also require a report to Congress on each country's use of U.S. supplied weapons. Isn't that already implied in an arms sharing agreement, Congressman? Do we need that?
Well, I think all that Senator Van Hollen is trying to do is emphasize it, because it already is the law. We certainly expect Israel and Ukraine and Russia and, well, Hamas not, to obey international law and Geneva Convention and all that. Yeah, so I have no objection to the amendment, but it should be being done already.
You know, one thing we started on the jobs report, last thing we talked about when you were here, as someone who's worked a career in the auto business, Congressman, that of course would be you. We saw the impact of the UAW strike coming to an end. It's partly why this jobs report was so strong. Are you happy with the terms of that contract, or did they get too much from the big three?
No, I am happy for the terms with it. And you know, sadly, the incomes of the top executives were so out of skew with what the average worker was making. They had a really strong case to make. And those auto workers, they sucked it up and took a big hit in 2008, 2009 at the Great Recession, when the car, government stepped in to save the car manufacturers. Now they're just trying to begin to catch up from all those years of being left behind. I think it was a good deal.
Glad you could join us, Congressman. I hope you have a great weekend. If I don't see you again, have a great holiday season. And thanks for the insights. From the great state of Virginia, Congressman Don Beyer, the Democrat, with us, setting us up for our panel. Rick and Jeannie are on the way in next. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. S&P right now higher by 9 points, up by about 0.2%. Jobs Friday has been a choppy session for the equity market. Treasury yields are soaring. Solid readings on both jobs and consumer sentiment, bolstering speculation that bets on Fed rate cuts next year may have gone too far. Here's where we stand in terms of equities. S&P up 8, up 0.2%. The Dow up 88 now, up 0.2. NASDAQ up 32. That is a gain of 0.2%. 10-year yield at 4.23%. The 2-year 4.71%. Gold down $29 the ounce to $19.99. Drop there of 1.4%. And West Texas Intermediate crude oil is higher by 2.5%. 71.11 on WTI. First, Quantum Minerals says it has requested authorization from Panama's labor ministry to lay off more than 4,000 employees in the country after the government announced plans to close its copper mine. Shares of First Quantum, the ADRs traded here in New York, down by 0.9%. Again, recapping, we do have stocks moving higher. S&P up 9, a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Only a week to go and hard to have hope in Washington right now. Even Congressman Don Beyer didn't seem too optimistic, but leaving out hope for a border deal between now and, well, a week from today. That's it. House and Senate are out now, off on the weekend. A week from today, that's when everyone's walking out with the boxes and the bags headed to the airport on the way home for the holidays. They don't come back till next year unless something changes. And by the way, that's possible. If they think they're onto something, Chuck Schumer can always keep people late. And maybe we will be working the holidays. It's not feeling like it yet, but look, anything could happen. Let's assemble our panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors on a jobs day. And I'd like to start there with both of you because this does seem to be awfully good news for this White House. Jeannie, so much talk about a soft landing, even though Bloomberg Economics doesn't see it. The data point to it. And I know that Joe Biden doesn't want to take victory for this yet, but is he carefully feeling more optimistic about the economic picture? It's not showing up in the numbers yet, but we're also not voting for another year.
Yeah, I agree with Mike McKee. They should be popping champagne, maybe quietly, to your point, a little bit behind the scenes. Don't take a victory lap yet. You really can't imagine a better jobs report given where we've been for the Biden administration and for the Fed. So a very good day. To your point, it hasn't been reflected in the polls. I'm just looking at Real Clear Politics average. Biden on the economy, he's around 37% approval, over about 61% disapproval. So there's work to be done for certain, but they really have to be very happy with what they are seeing today. And, if they can keep the momentum going forward, the trick is going to be translating that in the polls as we move forward. And that's something that they haven't been able to do yet.
So, Rick, I guess the moral of the story is here, based on at least the approval ratings, the polling data for Joe Biden, you can have as many jobs reports like this as you want, but none of them will matter until prices actually start to go down to levels that we saw pre-COVID here. At the same time, I should say, this does not look like a recession. How would you rationalize all of this information if you're at the White House trying to cobble together a campaign message?
Yeah, look, I mean, my Bible is the Michigan Consumer Sentiment Index. No incumbent president has ever been reelected with that index below 90. And I know that index well because it was its lowest point in history on election day when I was running John McCain for president. So we had zero chance of winning based on that indice. And I would say, I get what Congressman Beyer was saying about prices, but you had a significant jump up to 70 on the index this week with the preliminary December numbers for the sentiment index. And that is just as good, in my view, as polling data that shows you doing better with voters. Polling data is always a lagging indicator of success. And if I'm in the White House looking at the sentiment index for Michigan, I'm actually seeing light at the end of the tunnel. And if you can get prices to come down, if the inflation rate continues to go down, if the Fed actually starts looking at lowering rates and making housing more affordable, then you can actually start feeling better inside the White House about having an economic argument that could actually hold water with voters. I still think they ought to get rid of the word Bidenomics, but that's another topic altogether.
Yeah, of course, they didn't even come up with it, but they might be stuck with it. Rick, you said 90, right? That's your sweet spot. It's at 69.4. That's, again, the December Consumer Sentiment Index, University of Michigan, Jeannie. Again, he's got time to lift this number as well. You know what dawned on me this morning as we're thinking about jobs and the political side of all this? You know what we're not talking about this year? Is how awful Christmas is going to be, because no one's going to get their packages on time because we have a supply chain problem. Remember, we were dealing with the railroads last time. This has been a recurring holiday event for Joe Biden. And now on this second day of Hanukkah, no one's talking about it, Jeannie. Is that a plus in a quiet way?
It is a big plus, and a long way from where we were last year, the year before, as we were in COVID. So that is good. The consumer sentiment is moving in the right direction. It's not nearly where they need it to be, but of course they have time to see that rise. And I think you, Joe, pointed to something in your conversation with the congressman that's critically important, that we are seeing affected or reflected rather in the consumer price sentiment rather, is the strike. The fact again is that we saw the president stand with the union. The strike was ended, and many people are feeling, in the all-important state of Michigan in particular, that the president delivered on his promise. So those are really important things for the White House. To your point, we would not be where we are with this job report if not for that strike. And let's not forget also the SAG-AFTRA, the writers' strike. I mean, so he is on, moving in the right direction. Again, no time to celebrate yet, but they've got to feel pretty good, like an early Christmas gift for them with these job numbers and the consumer sentiment moving up.
Yeah. The combined impact, Jeannie, according to Bloomberg Economics, is 41,000 jobs of the 199,000 in this report. But remember, that's going to be a one-time impact. You won't have that with people coming off the picket line next month. Interesting comments from the congressman on matters of the border. Rick, that's a Democrat from Virginia, Northern Virginia, talking about being open to new restrictions on who could seek asylum, open to an expanded deportation process. What are we going to be talking about on the border this time next week?
Yeah, look, I continue to be hopeful. I'm not optimistic, but I am hopeful that this kind of mentality, this sentiment within the Democratic Party will help get a deal done. I know they're hard at work on this in the Senate. There is a desire to finally get something done from both parties on the border. And I think you start to see the makings of a deal with this kind of discussion from Congressman Beyer. The question is, are they going to run out of time? And the clock is not their friend right now.
Well, it sure isn't, Jeannie. To see the Wall Street Journal this morning, Joe Biden opened to proposals to tighten the initial screening standard that migrants clear to get a full asylum case, fully redefining asylum, essentially, and the designation of safe third countries. This is another world from where we were even a couple of months ago. Can something happen in the next week?
It can. The clock makes it very, very tough. History, it does not make us feel very optimistic. But to put my green hat on, can you imagine if they struck a deal on border security, what a boon this would be for a president that has already had enormous legislative success in unexpected ways, from infrastructure to chips and so on. Imagine if he's able to add that to this. I think he should be pushing behind the scenes Democrats very hard to agree to border security, to move in the direction of the Republicans, to get this done. It's not only important for him and electoral purposes, but Ukraine, Israel, everything else. I mean, imagine if we're sitting here next week or at the end of the year, right before Christmas Eve, saying, wow, they actually did it. That would be a huge story and a big success for this White House at the end of a really tough congressional year. So I'm hopeful that they will push Democrats to get there with Republicans. And let's not forget, my home state of New York, we are dealing with this, immigration crisis. It's not just the border states. Democratic mayors are pushing for something. So let's deliver it to them. Tougher border security, changing the asylum laws. We should be open to all of that because, to Congressman Breyer's point, we all agree security matters, and it matters whether you're Democrat or Republican. You don't have a nation without it.
So you take the security component, Rick, you redefine asylum, secure the border, then a conversation about legal immigration that could bring badly needed workers into this country. This could be an economic stimulus plan.
Yes, exactly. Along with the jobs news, you heard that the unemployment rate is down to 3.7%. I mean, it's basically full employment. And so where are you going to get the people to do the work? And so legal immigration for jobs in our economy is got to be a high priority. Look, I mean, I don't know why the president doesn't make more public statements in this regard. Why wouldn't he on Monday go to the American people, do an address from the White House and say, you know what, free people of the world need us now. Our Christmas gift to freedom is funding for Ukraine, funding for Israel, funding for Taiwan, and funding for our border, and lay out why he is anxious to get a deal done on border. And buy into this sentiment and put public exposure into this issue, because he's got the bully pulpit. Use it.
That's an Oval Office address if there ever were one. Rick Davis and Jeannie Shanzano are back as we turn to the campaign trail next. World and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The Palestinian Authority says it's in talks with the U.S. on a post-war plan for Gaza. Palestinian Prime Minister Mohammed Shtayyeh tells Bloomberg News Israel's stated goal to destroy Hamas is unrealistic. He'd like to see the militant group come in as a junior partner in a future Palestinian state. Bloomberg government's Jack Cohen has more on the Washington perspective.
Any future governing coalition with the Palestinian Authority and Hamas is going to be tricky, especially to get Israelis to agree to it, especially after the events of October 7th. And so no indication that any sort of peace deal is in sight, but interesting to see that at least that there are authorities thinking about what happens the day after a permanent ceasefire goes into effect.
Bloomberg government Zach Cohen. The UN is delaying a vote on a ceasefire resolution in Gaza in order to give Arab leaders more time to convince the U.S. to let it pass. Leaders from Egypt, Qatar, and Jordan are set to meet with U.S. Secretary of State Antony Blinken later today to encourage the U.S. to abstain. Israel is adamantly opposed to any ceasefire, saying it'll give Hamas the chance to regroup. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains right now. Has been a choppy session. Jobs Friday, Treasury yields soared, solid readings on both employment and consumer sentiment. That is bolstering speculation that bets on Fed rate cuts next year may have gone too far. S&P up 9. That is a gain of 0.2%. The Dow up 84, up 0.2%. The NASDAQ Composite Index up 37, a gain of 0.3%. 10-year yield 4.23% with a 2-year that's yielding 4.71%. Spot gold down $27 the ounce to $2,000 even now. That is a drop of 1.4%. And crude is rallying. West Texas Intermediate up 2.6% now, 71.12 a barrel. So the Dow, the S&P, NASDAQ all holding in the green. America's labor market defied gravity in November. And with that story, here's Bloomberg's Vinny Del Giudice.
Job growth topped Wall Street forecasts. Wages picked up and the unemployment rate declined. We're looking at 199,000 more workers on payrolls. Yes, some are returning auto strikers, and unemployment at 3.7%, the lowest since July. All in all, the numbers are good news for Main Street, but deflate Wall Street's hopes for a Federal Reserve rate cut anytime soon. Vinny Del Giudice, Bloomberg Radio.
Tesla has been cited by the California Division of Occupational Safety and Health for 4 safety violations after an employee was seriously injured when she got stuck in a Model Y at the company's Fremont factory earlier this year. This is according to documents obtained by Bloomberg through a California Freedom of Records Act request. Again, recapping, stocks are higher. S&P up 8 now. That is a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We should hear from the RNC today on whether it's going to allow Republican presidential candidates to take part in unsanctioned debates. The funny part is they're already scheduling them, and I'm not sure what that says about the role the RNC is playing here. As we reassembled our panel, we've got a couple of pretty important headlines on the campaign trail. We told you about this yesterday. There are debates coming together in Iowa about 5 days before the caucuses and 2 days before New Hampshire in Manchester. There might even be competing debates. We'll see who shows up. I'm assuming Ron DeSantis will still be there as we bring you the story here. Great reporting from Nancy Cook. It's an exclusive at Bloomberg. Ron DeSantis Super PAC canceling a donor event before the debate the other night that would have included a ticket to the event, citing a lack of interest among donors. That's tough. Rick Davis and Jeannie Shanzano back with us. Rick, this Republican is having trouble resonating. You've suggested he might not make it to New Hampshire. Where's your head today?
Yeah, I think that's still the case. You have to have a rationale to how to win, and if you predicate all of that on saying you're going to win Iowa, and Ron DeSantis, for instance, said I'm going to win Iowa. Now, anything short of winning Iowa is going to be looking like a big defeat for him. I don't know why he would have put that marker out. It was a relatively recent thing, and maybe just feeling defensive about his flagging campaign. But the bottom line is, he sets expectations. The media will follow those expectations to where he is. And then if he doesn't win, even if he has a great showing, they're going to say, oh, but he said he was going to win, and now he didn't. Yeah. So, and there's no expectation that anybody has of him being competitive until maybe when they get back down to Florida. But that's way too long to last. The lesson we learned from Rudy Giuliani is you can't lose, and then expect to win.
Yeah. You can't start your campaign in Florida. I don't know if we're reading into this a little bit here, Jeannie, but the Never Back Down PAC had planned this luncheon. They invited 3,000 people, and it wasn't cheap. $10,000 contribution would give you access to this luncheon. This, by the way, was in Tuscaloosa. This is Rick Davis country here, as well as a ticket to the debate itself and an invite to a post-debate celebration if you want to hang out with the governor. Just before the debate, Never Back Down decided to cancel the lunch, Jeannie. What does that mean?
Never back down has backed down, Joe. And
I guess that's right.
I'm seldom empathetic to Ron DeSantis, but as you go through that in such detail, it makes me feel badly for him. His campaign has been in a bit of chaos, never backed down, losing leadership, been in chaos. His poll numbers have been going in exactly the wrong direction. I think we have to keep in mind we don't get a lot of public polls from Iowa of late. But I think this is, another and a continuing sign that his campaign is faltering. I agree he may not be there. Maybe he shouldn't be there in New Hampshire, depending on what happens in Iowa. But keep in mind, even if he was able to squeak out Iowa after his 99 county tour, Iowa is seldom a predictor of the winner of the primary, and his numbers simply don't look good in the remaining states as of now. So he is not in a good position. I think we're going to see Sununu in New Hampshire make an endorsement fairly soon, and I suspect he is not looking as kindly at DeSantis as he would have been maybe 6 or 8 months ago.
Similar events in Miami around the debate there in November raised roughly $1 million for Never Back Down PAC. Rick, you've put events like that together. Is this just the nature of the business? Sometimes they don't pan out. You go to Tuscaloosa, maybe you don't have the network there you thought you had, or is this actually a sign that we should be looking at?
Yeah, it's hard to get people to go to T-Town other than on Saturdays of home games. And so I think that if Alabama was playing Auburn, you'd have a crowd. But the bottom line is his PAC is in trouble. Most of their senior leadership have left. They've actually tried to start a new super PAC to support the DeSantis campaign. What do you need a new one for if the one you currently have that you gave, $80 million to is working fine? So there's just something that smells bad under the cover. None of this stuff adds up. And as you say, if you're having trouble raising money at an event where arguably he did a pretty good job at the debate, so they clearly had a lot running on that. I think it's an indication that there's a level of dysfunction that could be problematic. And if they're running out of money, that's even a bigger problem, because different from most super PACs, Never Back Down is actually running the campaign. I mean, it's almost like the DeSantis campaign is a guest of Never Back Down in this election. And they're doing all the organizational work in Iowa. They're doing all the get out the vote. They're doing all the caucus organizing. They're doing the ID. This is all things that campaigns generally take responsibility for, because they know if anything goes wrong, you're completely out of the race. And that seems to be what's happening here.
Wow. Well, get ready for the ads. Axios had some fascinating numbers this morning, Jeannie, on political advertising. Group M forecasting that ad spend could reach $15.9 billion in 2024, $17 billion when you include direct mail, while Ad Impact tells us more than $100 million was spent through September on Republican primary races. That's more than we've seen in any other cycle. We're about to get deluged. Jeannie, when does Joe Biden start spending some money on ads?
Already spending. He has spent more than most of his predecessors to this point. But to your point, he is going to be investing more. But, gosh, who wants to live in one of these swing states now? Because, those of us saying we're not going to be getting these. But if you are in Michigan or you're in Pennsylvania, your life is pretty much going to be these ads. And that's true whether you're watching TV or whether you're online. I mean, it is going to be insanity in those 5 or 6 or 7, if you will, states. So, get ready. You got to buckle in. They're prepared for it, but it's bad.
It's a lot of money here, Rick, $100 million. So it really will come down to a battle of dollars at some point. I find it fascinating now. Streaming TV is the new frontier for political advertising. Is it worth the money?
Yeah, look, I love streaming TV. You get all kinds of feedback mechanisms, whether or not somebody was actually watching when your commercial ran, the demographics of the people, the exact location. The targeting is amazing.
Rick Davis, Jeannie Shanzano, insiders with us every day on Sound On. I'm Joe Matthew in Washington. I'm glad you're with us. We'll have some final thoughts ahead. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lululemon Athletica shares are advancing after earnings. Lulu up now by 5.9%. Its fourth quarter revenue guidance did trail Wall Street estimates, a rare miss for the retailer whose performance routinely exceeds investor expectations, but shares are advancing now by just about 5.8%. Another retailer, decidedly different story, RH. Lower by about 15% after the home furnishings retailer cut its 2024 adjusted operating margin forecast, citing a market that has become, quote, more promotional. Broadcom, a chip supplier for Apple and other big tech companies, expects the rapid expansion of AI computing to help offset its worst slowdown since 2020. Right now, we do have shares of Broadcom up 0.4%. Micron has struck a union deal for construction of a $15 billion chip-making facility. More from Bloomberg's Steve Rappaport.
Charlie, the accord for the Boise, Idaho plant is a rare example of an organized labor agreement in the country's semiconductor industry, which Washington is trying to rebuild with subsidies worth $100 billion under last year's CHIP Act. The Commerce Department, which plans to announce the first awards by the end of the year, has expressed a strong preference for applicants that have reached construction accords with unions known as project labor agreements. Micron has also said it's investing as much as $100 billion in New York State over the next 2 decades, and that the site there will be governed by such an agreement. Charlie?
And that's Bloomberg's Steve Rappaport reporting. Shares of Micron Technology, right now they are trading little change. And those are our top company stories. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where we try to keep you up to date on world and national news as often as we can. Let's do it right now with Nancy Lyons in the Bloomberg 99.1 newsroom. Hi, Nancy.
Hi, Joe. Well, the U.S. labor market sure continues to surprise, with the number of new jobs added last month coming to 199,000. That's about 15,000 more than expected. And the November unemployment rate fell a couple of ticks to 3.7% from 3.9%. Bloomberg's Irv Chapman has more from Washington.
The job gain was welcomed at the White House by Acting Labor Secretary Julie Su in a Bloomberg interview.
199,000 jobs were added, and it reflects continued steady growth in our economy. And yes, we also saw workers come back on the payroll after strikes that resulted in record wage increases and benefits that we want for working people.
At the same time, the University of Michigan survey found consumer sentiment improving with reduced expectations for future inflation. In Washington, Irv Chapman, Bloomberg Radio.
More Americans are optimistic about the future of Social Security than they've been in recent years. A new Gallup survey shows half of non-retirees expect Social Security to pay them a benefit when they retire. That's compared to 47% who say they do not have faith in the system to help them. The positive response is up from readings between 2005 and 2015, when a majority of non-retirees said they did not think they'd receive Social Security benefits. And among those who are currently retired, just over half believe they will continue to receive full benefits. Family members of victims, as well as survivors of the 2021 Oxford High School mass shooting in Michigan, have been speaking out today at the sentencing of shooter Ethan Crumbley. Here's Riley Franz, who was shot that day.
I can no longer sleep without having flashbacks of a bullet entering one side of my neck and exiting the other. I feel limited on what I can do at 19 years old because of the thoughts running through my head.
Ethan Crumbley is being sentenced for the murder of 4 students. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy, thank you. Maybe it's because I'm from New England, but there's just nothing more fun in politics than the first of the nation primary. You might feel the same way about Iowa. For me, it's New Hampshire, and we're going to be there in a couple of weeks. We're going to bring you all the stories that I'm talking about, including what I consider peak cycle. And it happened yesterday at something called the Lesser Known Candidates Forum. This is not for Rick Davis. This is not for Jeannie Shanzano. This is for people who have no chance of winning the White House. Some of them are familiar, like Vermin Supreme, the bearded man who wears a rubber boot on his head. There's Paperboy Love Prince, who spoke today with a calculator hanging around his neck, promising $1 million for 1 million different Americans. Then there's Richard Rist, a Democrat, Who's going to save you from the zombie apocalypse? They gathered for an important forum in Manchester.
If you don't vote for me, it's going to be the start of the zombie apocalypse.
See?
Thank you for your service, sir. Appreciate that. That's right. That's right. Then the Starship Enterprise is going to have to come to Earth and save the world.
They're trying to get him off the
I'm
stage
happy to
now.
share my secrets about defeating the zombies, but for now, just
Okay.
remember.
So you're out of time. Yep, you're out of time. He was followed by Vermin Supreme. I'll give you a taste of that next hour. Rick Davis, this is part of New Hampshire, right? The crazy candidates.
Absolutely. This is the reason we love New Hampshire. I know Vermin personally. He's one of my favorites. I mean, it looks to me like the boot is a little bit larger than it used to be, so maybe he had to upsize. But John McCain had more town halls in New Hampshire than any living human being, and every one of these candidates showed up at him, and he'd let them talk for a couple of minutes at the very beginning, and then with the promise that they'd get lost afterwards.
This is the best. Jeannie, do you want to get together with Paperboy Love Prince or Vermin Supreme? I can make either happen when we're there.
Oh, Joe, it's hard to choose. I think Paperboy Love, what is his name? Prince? I like it. I'm going to go with him, but I'll take Vermin
I'm
as
gonna
well.
have to-
Let's go.
Well, you know, Vermin is an icon, and it's going to be hard to top that. Around this time next hour, I'm going to introduce you to Vermin Supreme if you're not familiar, because you can't have the primary without him. With apologies to Rick and Jeannie, I'm Joe Matthew. Hour 2 starts now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Israel rejects new calls for a ceasefire. Welcome to Hour 2 of Sound On as Tel Aviv pushes back on the overture from the UN Secretary General. With more fighting in southern Gaza now, we'll have the latest for you from Bloomberg national security expert Nick Wadhams with insights today from retired General Ben Hodges, a voice of experience as the former commander of the U.S. Army in Europe. He'll be with us in just a moment. Later, we'll look at the cyber side of this whole story by the view of the White House. Our conversation with Ann Neuberger, Deputy National Security Advisor for Cyber and Emerging Technology, will join us live from the White House just about 20 minutes from now. You don't want to miss it. So let's get started, as always, with a look at Wall Street, trading in New York, and Charlie Pellet. How's it going, Charlie?
Yes, so far we are higher across the board. Joe Matthew, Jobs Friday. The Dow, the S&P, NASDAQ, all in the green. We're looking at an 11-point gain right now on the S&P, up by about 0.3%. But that Fed rate cut exuberance ebbed after the jobs data. 10-year yield now at 4.23% with a 2-year 4.72%. The Dow up 85, higher by 0.2%. NASDAQ up 48, higher by 0.3%. Bottom line, after earlier losses, stocks now in the green. Spot gold down $28 the ounce to $19.99. That is a drop of 1.4%. We do have West Texas Intermediate crude trading just above $71 a barrel, $71.14, an advance right now of 2.6%. Anglo-American shares plunged the most since March of 2020 after unveiling plans to cut drastically the amount of commodities it mines in a bid to slash costs amid logistical and operational snarls at its operations. Anglo-American down now by 19%. Recapping, stocks are higher. S&P up 11, a gain there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Friday edition, hour 2 now of Bloomberg Sound On. I'm Joe Matthew in Washington. Get him something for that cough, Charlie. We'll get you back for a market update in just a couple of minutes. I never hear him do that on the subway. The news from Israel hasn't changed a lot since we last spoke yesterday, but what we're hearing from the UN is feeling a bit different as we anticipate a vote in the Security Council calling for a ceasefire, even though we're just coming off that week-long pause. They never used that word because it has implications. Secretary General Guterres talked about this yesterday.
There is a high risk of the total collapse of the humanitarian support system in Gaza, which would have devastating consequences.
Devastating consequences. That vote could come in as little as an hour's time, and we're joined right now by Nick Wadhams, who runs our national security team here at Bloomberg in Washington. It's good to see you, Nick. The significance of this vote, knowing that Tel Aviv will not respond to it, is what?
Well, that's a great question, and one we ask a lot at the UN when there is just so much talk and so often so little action. This one does feel a little bit different, though, because what you're seeing here is whether the U.S. is going to veto this resolution and really just stay in lockstep with Israel and give Israel the cover it needs to press ahead, or whether the U.S. is going to signal its sort of growing alarm and dissatisfaction with the way Israel has conducted this campaign. So it might not vote yes, but it might not vote no. It might abstain, allow the vote to pass, put more scrutiny on Israel and say, listen, you guys, if you want our support, you need to get your act together. The calls for something, protection of civilians, is getting louder, and you got to do something because what we're seeing so far is not up to snuff.
Has the Security Council done the same thing for the war in Ukraine, knowing that Russia is a member?
Well, I mean, they can't do anything on Ukraine.
Yeah, right.
Because Russia just paralyzes absolutely everything. And you're seeing that play out a little bit here as well, where, the U.S. and Russia are so at odds over absolutely everything, including this one, and so it just absolutely freezes things. So if the U.S. did abstain from a resolution last month where they called for humanitarian pauses, different from a ceasefire.
That's right.
So they did allow some action to get through, but, it's looking pretty bad on this one, I have to say.
The IDF is driving into southern Gaza. We've been talking about this for a couple of days now. There are great concerns about civilian casualties, and we've been hearing about that as well. As a matter of fact, Anthony Blinken spoke about this in an unrelated news conference earlier today. Listen to the Secretary of State.
It is imperative, it remains imperative that Israel put a premium on civilian protection. And there does remain a gap between exactly what I said when I was there, the intent to protect civilians, and the actual results that we're seeing on the ground.
What do you make of that line? A gap between intent and results. What does the White House want to see in the days ahead?
He's referring to something very specific there, which is that when he went to Israel last week, he came out and said he got very specific assurances from Israeli leaders that they would create safe zones. They would warn people about when they were going to strike certain areas, all with the intent of not doing what they had done in northern Gaza to the south. He had been very clear, listen, you cannot cause the almost total destruction of northern Gaza in the south. And he came out and said, listen, my trip was successful because Israeli leaders assured me that they would put these protections in place. That was the whole reason he went to Israel on that trip. He's now saying, well, I'm back in the U.S., they're prosecuting that campaign, and reality is not living up to the promises that they made to me. Question is, what is he going to do about that? And so far, the U.S. has not really done much.
Well, he did balance that statement with some of the things you just mentioned. He said they're doing a better job. They're evacuating neighborhoods instead of cities. They're establishing the safe zones you mentioned. They're focusing on a more narrow area. What else did Israel promise?
Well, we don't exactly know what they promised, but I think what he's referring there also is a couple of instances where you have had these mass casualty events, striking buildings where you've had dozens of people killed at once. Right. I mean, it's a very difficult balance for the U.S. because on the one hand, they're calling for Israel to protect civilians, and on the other hand, the U.S. is sending Israel these bunker buster bombs, artillery shells that cannot be narrowly targeted. So, you can make the argument that in some ways the U.S. is talking out of both sides of its mouth saying, hey, you got to do this. But at the same time, we're going to send you these 2,000-pound bunker buster bombs whose whole point is to not be terribly discriminate in their actions. So I think, what he's saying there really is like, you made those promises. We are seeing some things on the ground, but you're not doing enough. And we can't keep having these attacks where dozens of people are killed all at once, innocent civilians.
It's really helpful, Nick. Your reporting has been indispensable since this all started, much like it has been the last 2 years in Ukraine, and we thank you for sharing it with us, as always. He runs our national security team here at Bloomberg in Washington, Nick Wadhams, as we add the voice of General Ben Hodges back with us here on Bloomberg Sound On, former commanding general, U.S. Army Europe. It's good to see you, General. Thank you for coming. To Nick's point, I know you were listening to our conversation. Is the U.S. showing a double standard here, sending the munitions, the bunker-busting bombs, the 155-millimeter shells that Nick is referring to, but then also demanding restraint and the preservation of civilian life? Are we asking too much?
Well, I have to say I was very impressed with Nick's reporting there. I mean, that really was a good description of the situation and the challenge, and also the efforts by our Secretary of State to press Israel. It's not that we're setting a double standard. It's that Israel has failed to have a political outcome as part of the overall strategic end state that they want for this war. It's all kinetic. And if I put myself in the shoes of an Israeli battalion commander or a company commander, and my mission is to destroy Hamas, without having a political end state that should be something like a two-state solution where we're going to have to live with Arabs after this is over, it makes it extremely difficult for soldiers to do their job. And so you end up with people looking over your shoulder, whether it's the media or lawyers, telling you, well, you can't hit that building, but you can hit that building, or you can't use this, but you can use this. And I think the fatal error that the Netanyahu government is making here is that they have not come up with a strategic end state with a political component that will inform how the military does its job.
General, you served in both the Afghanistan and Iraq wars. There's been a lot of talk about urban warfare, about what the IDF is facing, and why in some cases they don't find it appropriate to send boots into these neighborhoods, striking from a distance or from above in terms of the air war here. Is Gaza another Fallujah? How do you look at it?
Well, this is much worse than Fallujah, for sure.
It's worse.
Partly because of the density of civilians that are packed in there, and the Hamas unwillingness to let them or to continue using them as shields, because they can see that the objective given to the IDF by Prime Minister Netanyahu, it's guaranteed that they're going to continue using force against civilian targets. I'm sure that whatever Secretary Blinken was told, they were sincere, but the Prime Minister ultimately is responsible, and soldiers are responsible. Even if Hamas uses innocent people as shields, the burden of responsibility for protecting those civilians still falls, according to the law of armed conflict, on the, in this case, Israeli soldiers. So, of course, there should be enormous global pressure on Hamas to stop doing this, but I don't sense any of that is coming. And, of course, this creates a massive, not only a massive political problem for our president, but, frankly, worse, the Kremlin is the biggest beneficiary of all of this. I mean, Hamas accomplished in one day what Putin could not do in 2 years, and that was to make the West forget about Ukraine. And so, the way this thing is such a mess, and it's so devastating for innocent people, and you've got people focused on Israel and not on helping Ukraine defeat Russia. So it's not just about resources being diverted, but it's about institutional and emotional energy that's being diverted. Mm-hmm. Iran is Russia's closest and only real ally. Russia is Iran's closest and only real ally. This is not a coincidence that Hamas has attacked Israel right now when Russia needed it the most.
That's remarkable because it certainly turned our attention here in Washington as well, General. I don't have to tell you, I'm sure this is partly why lawmakers don't feel as motivated to fund the war in Ukraine. There seems to be a much greater appetite to help Israel, which I think you could argue needs the money less. What do you think?
Yeah, I think you're exactly right in that. this is where the president has got to lay out to the Congress and to the American people why Ukraine matters to us, why our economy, our prosperity is tied to European security and stability and prosperity. Russia's attack on Ukraine has disrupted energy and food supplies. Inflation is driven in large part by what Russia is doing now. So this is about us, our interest, not just Ukraine. And of course, if Russia is not stopped in Ukraine, they've made it very clear they will continue. So you could end up with them going against a NATO country. And then you've got U.S. forces are going to have to be involved. And of course, the Chinese are watching to see, does the U.S., with all of our allies, do we have the political will, the industrial capacity, and the military capability to help Ukraine defeat Russia, help Israel defeat Hamas, while still pushing Israel to accept a two-state solution, deter Iran from expanding or escalating this conflict, and then for China to see that we still have enough left over to deter them from making a terrible miscalculation. So we've got to get organized in the West. We've got all these allies, but we're not addressing these challenges as a whole, and I think that's what we've got to do.
General, more than 130 hostages are still being held by Hamas. Presumably, they are still alive. That according to Israel. At what point do we see special forces begin extracting them, or do they simply not know where they are?
Excellent question. I'm sure that the Israeli Defense Force and Israeli intelligence have more information on what's out there and who's still alive and where they might be than we will know publicly. But it's still got to be very difficult. Hamas doesn't even control all of the bad guys in there. So it will be difficult to get 100% confidence that we know where everybody is and that we can get them out. And of course, if it was my daughter or a friend or somebody that was a hostage, I would be in total agony wanting to do anything to get them out. But if you can step back from it and put yourself in the shoes of national leaders, hostages, even if you rescued every one of them, Hamas could go get more. So at some point, somebody is going to have to make a really, really hard decision about do you continue with the attack? How much risk do you take to go in and try and extract hostages? I think the Israelis will do everything in their power to get every hostage, just like the United States would. But we have to find that balance because terrorist organizations will stop at nothing to continue getting hostages when they see the incredible leverage that they get from having them.
I have to ask you, General, about what appears to be progress here in an effort to block military promotions from being confirmed in the Senate. I'm referring to Tommy Tuberville's blockade, the senator from Alabama, that was a protest against the Pentagon's abortion travel policy. He's decided, General, to let them all go through except the 4 stars. You know a little bit about this. And Tommy Tuberville has suggested that 4-star generals don't have a heck of a lot to do anyway. They've got big staffs to get paid too much money. What does it mean to hold up these 11 4-stars in the meantime?
It's such an abuse of his power there as a senator, and it creates a cynicism about the Congress, which is really unfortunate. I served 3 times in Army Congressional Liaison as I was coming up. And of course, members will use their ability to block promotions or whether it's ambassadors, judges, or flag officers for individual reasons. But I've never seen it in many years, such a blanket abuse of this. And of course, every time I listened to the senator from Alabama, it was clear he had no clue about the impact of what he was doing, or else he absolutely didn't care, which is unfortunate for a senator on the Senate Armed Services Committee and from a state that has a significant military presence. So it damages not only the families of all the people involved, but it sends a statement that, having a senior officer, whether it's an admiral or general in these positions, really doesn't matter. And that undermines confidence that people have in the whole system.
Well, General, I want to thank you for coming on today. Ben Hodges, a voice of experience and authority, when we need it most. I'm Joe Matthew. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the green. 13-point gain right now for the S&P at 45.99, up by 0.3%. Dow Industrials also up 0.3%, higher by 98 points. The NASDAQ Composite Index is up 56 points. That is a gain of 0.3%. NASDAQ 100 Index is up by 0.3%. 10-year at 4.22% with a 2-year that's yielding 4.71%. Gold down $27 the ounce to an even 2,000. A drop now of 1.4%. And West Texas Intermediate crude oil is up 2.7%, 71.33 a barrel. Starbucks says it reached out to the union representing hundreds of its stores, a potential step toward ending an impasse that has frayed the coffee giant's relationship with some of its frontline employees. Starbucks shares up now by 0.2%. Again, recapping, stocks are higher. S&P up 14, a gain of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Arguably the most underreported, maybe one of the most important stories of the week. You probably haven't heard about it either. As the Federal Cybersecurity and Infrastructure Security Agency briefed lawmakers yesterday, House and Senate members and staffers on what happened just a couple of days ago here. This is pretty remarkable stuff in the last week. Hackers have breached computers at less than 10 water facilities in different parts of the country. There's one specifically in Pennsylvania that made news and led to a series of reports on the extent of this threat. And it's where we begin our conversation with Ann Neuberger. I'm glad to say we're going to go to the White House for this because it's important to the administration. It's important to us. The Deputy National Security Advisor for Cyber and Emerging Technology, Ann Neuberger, with us from a sunny North Lawn. Ann, it's great to see you, and welcome back to Bloomberg. How concerned are you, and what should we know about these apparent attacks on water facilities?
Thanks, Joe. So companies, critical services in this country face persistent, significant cyber attacks. It's a top priority for the administration. We're pushing out actionable information. We're pushing out guidelines on how to secure against it. Some companies and state and local governments have acted. We need everyone to take this as a call to action, to follow that cybersecurity advice and really lock their digital doors against the threat.
Are you able to trace the source of these attacks? What's prompting them?
Great question. So two particular sets of attacks we're concerned about at this moment in time. One is criminal cyber attacks against the hospital chain. It had real impact. Rural clinics closed, some hospitals in 3 states turning away ambulances and canceling elective services. That's done by criminals, and the White House has pushed out guidelines on how to tackle that. Second set of attacks we're tracking is an increase by Iran in cyber attacks against 10 water systems in this country. And in a similar way, there are basic cybersecurity practices like changing default passwords and limiting administrator account access that could prevent those attacks being successful.
So that is officially, though, the line from the White House that Iran was behind these 10 attacks against water treatment facilities here in the United States.
It is, but I want to be clear, each and every day, American companies, critical services are facing persistent cyber attacks, and we absolutely need to do more to lock our digital doors to defend against them. Yes, sometimes in periods of crises, we'll see an increase in a particular type of attack, but every single day we have too many unlocked doors and open windows in our digital cyberspace.
Yeah, that specifically, the plant in Pennsylvania that I mentioned outside Pittsburgh, the Municipal Water Authority of Aliquippa serves about 15,000 people. We have no reason to believe that anyone is at risk. Are they just trying to let us know what they can do, Ann?
Absolutely. No one is at risk. The attack had minimal impact. The water system is operating the water system manually.
What's the response then? Is there an answer from the administration to an attack like this?
So there's an us and a them. And the first response needs to be to absolutely lock our digital doors against these attacks. So for example, in the case of the water system, just last year, EPA issued a rule putting in place minimum cybersecurity practices, things like changing default passwords, things like removing or limiting the accounts administrator access have. That rule faced litigation and had to be pulled back, but there is absolutely nothing preventing every water system in this country. It doesn't cost any money to change default passwords, to put in place those basic cybersecurity practices. So that's the first part. There's the us part of this, which is to say we have to lock our digital doors. And then, of course, there's the them piece. And from a U.S. government perspective, there are actions we're taking every day, taking down digital infrastructure, ensuring that we're following the trail of who is responsible for that and handling it appropriately.
How about just remove the door? I know you want to close the door, but should these facilities be online at all? How about we take all this equipment off the internet, Ann?
It's a great question. There are real reasons to